All right, guys. So we got Apple and Amazon earnings dropping in like 50 minutes, an hour. All right, guys. So yeah, we got Apple earnings, Amazon earnings. All of them are dropping after the closing bell today. All right, we got SQ earnings, Coinbase earnings. All right. So actually, we got 53 and a half minutes left. Sorry, I looked at the wrong time. Building this up now. Hold on. And my typing is off. There we go. All right. This thing's counting down until the closing bell. Oh my God, actually, software, my bad. Here, we're here. All right, what's up, Emmanuel K. Roger, AW? Yeah, we're green on our Exxon Mobil trade. We're green on TSN. We're green on Walgreens. We're green on Tesla today. We're green on SOXS. We're green on Microsoft today. We are green on Google today. We are green on Amazon or AMC today as well. All right, and we also have Amazon earnings today as well, guys. Remember. All right, so again, this is going to be really influential over markets. Drink some caffeine. Amazon did push up today. It's at 129s. Nvidia at 445 40s. All right. Still got about an hour left. You can see the timer on the right. You can see Amazon right here, man. Just a crazy good crazy good year. Again, here's Amazon currently sitting at about 129. Here's Apple. Apple's had less good of a day. Pretty choppy, honestly, for Amazon. Let me get the music playing. There's a small chance that the people installing my generator are there's a small power might go out. If it does, I don't know what I'm gonna do. All right, let me get some music. You know what I realized? So I bought these glasses, right? So I bought these glasses. Uh, I bought them online on this place called Overnight Glasses that'll send me these glasses like very quickly, right? So I bought these glasses, but apparently, like somebody, like my father-in-law, is like kind of like stereotypical, like dude, which which I was just completely oblivious to. They thought they had little diamonds on the front of them, and like they were like my father-in-law and some other people were kind of joking around about these glasses that I was wearing. Again, I'm completely oblivious to this, bro. Honestly, I don't care if I could see. I could see. but don't judge me for these glasses. All right, like I'm wearing them. I can see when I have them on, and y'all will be okay. Y'all hear my dog. I don't know if this music's very helpful either. All right. Let me stop playing around. Can y'all hear the music? Let me know if you can. Remind me to switch my headphones out before like the real stream starts, please. Again, like remind me to switch my headphones out once the real stream starts. But yeah, let me know what you guys think. We're gonna do a poll here as well. I'm gonna switch my headphones. All right, so does Apple stock beat or miss earnings? Beat, miss, and then we're gonna do another one as expected. There, go ahead and vote on that poll. Let us know what you guys think. We're also gonna do a Twitter poll right now. All right, so Apple drops their quarterly earnings soon. Beat or miss? And Apple All right, so again, we got our poll live as well. What I will ask you guys is just bump the like button if you could take the time, hit the like button. We're also going to get this poll going live here, as well as beat, miss, vote on that poll. We'll probably do one for Amazon as well. I think Amazon actually releases theirs first. Yeah, so I think Amazon actually releases theirs first. Amazon, I think, is at 4 o'clock even. Amazon's at 4 o'clock on the dot. And then I think Apple is later. What about Apple? So Apple, this is Q3 earnings. Amazon, Q2 earnings. SOXS is back. Yeah, I'm in SOXS right now, actually. Yeah, it's pretty flat on the day. I mean, it's down a little bit. Amazon dipping down right here. You can see on the right side. This is Amazon. Here's Apple. The market's starting to turn a little bit. It's really been a flat day, to be honest. Apple's very flat. Amazon is still green, but flat as well for the most part. Maybe slightly green, not a huge percentage up. NVIDIA and other microchips are dropping down some. So NVIDIA is down to 443s. Ended up pushing up at the opening bell and then correcting back down some. So let me make this a little bit bigger so it's a shared space here. What's up, DS? Again, y'all vote on the poll here. Here's my poll. Again, we appreciate it if you hit the like button, hit the subscribe button. Let me see. I'm gonna make sure did I post my poll? I don't think I posted it yet. Hey, here's my Twitter page. Give me a follow. There's the link. Give me a follow. There's the Twitter page. If you haven't already, give me a follow. We appreciate it. Again, this is the biggest earnings day of the month, aside from maybe Tesla. Again, vote on that poll. We appreciate it. Hit the heart button on it and all that good stuff. Bro, this guy, dude. All right. Again, getting a breakdown of 191s in Apple here, 191s. Amazon's still kind of green, but did dip under the VWAP, under the 200 EMA, which is a pretty bearish sign, I would say. I got a little bounce in Amazon. Shout out to the other people who like this post about Apple. Yeah, unemployment drops tomorrow, as well as non-farm payroll. So those are both pretty relevant. Again, I'm going to put the expected numbers for Apple on screen, which is 119. And I'm going to put both of these up since both of these are pretty big companies. Apple is expecting Q3 EPS to show 119 in profit per share. Amazon on 72.81 billion in rev. Amazon is expecting, getting a little bounce on Amazon as well. Amazon's expecting 34-cent profit per share on 131.4 billion. In revenue. So this is basically what we got going for these two right here. Amazon's starting to push up a little bit. Yeah, I mean, Apple's going to be fine as a company though. They're pretty much flat. I mean, they're down over the last couple days, but when your yearly chart looks like this, you know, when your yearly chart looks like this, I mean, I think a little baby pullback is justifiable, especially if like we're actually green on the day relative to this report. I honestly, this is right around the previous closing price. So the previous closing price for Apple is somewhere around here. Maybe not. Maybe it's the opening price, but it's not that bad. Again, do me a favor, hit that like button as well, guys. On our poll, 70 votes so far. 53% say beat, 22% say miss, 25% think they're going to come in as expected. Amazon rejecting at the volume weighted average price level. We got some votes on Twitter regarding Apple as well. 56% of people think they're going to beat, 33% think miss, and 11% think they're going to come in as expected. Again, right now, technically, Apple, when is Apple's actual earnings call here? Don't be late. Good. Okay, so I actually don't mind this. So, like, Apple, to put it into perspective, Amazon is scheduled to drop right at the close. Like, right at 4 p.m. on the dot, Amazon releases their earnings. So, again, Amazon's on this right side here. Again, they're expecting 34-cent EPS on 131.4 billion in sales revenue. But, again, Amazon is dropping right at 4 p.m. Apple drops at 4:30 technically. Now, sometimes they release early, but again, according to this, they're dropping at 4:30. So, and I do like at least that they're spread out a little bit. Apple below 130, 170. I'd wish. I'm bullish on Apple Vision. Yeah. Hey, thanks. Yeah, there's a little pop up on Apple. Again, let's see if the VWAP influences Amazon on this right side here. I think Apple will be, but Amazon not sure. Big tech of billions of cash. Yeah. Again, we'll see. Again, there's Amazon at 128. Started to dip down at 191.10s, 191.11s. Amazon at 128.69s. We also have Coinbase dropping today, and that's slightly green on the day. Closed at 90.40. It's at 91.03 right now. We also have SQ, which is at 73s. Bitcoin currently, it's looks like it's slightly green on the day, but it's pretty flat. Amazon pushing over the volume weighted average price right now. Again, you can kind of see Amazon right here move over the VWAP, starting to push up over the last couple minutes. And Aapl still pretty consistently dropping. Small little bounce just now, but we'll see if that actually holds. But again, are we going to bounce back? I guess is the real question, and I don't know. We'll see if we do or not. Let's see what our Twitter polls are showing. So Amazon stock. We're going to do an Amazon poll as well here, so you guys can keep track of what's going on in both of these, beat or miss. If you want to vote on Amazon, say we're already voting on Aapl, but if you want to vote on Amazon, you can here on Twitter. Again, give me a follow on Twitter if you want to kind of catch everything we're doing. And yeah, here's the Amazon poll if you want to vote on that on Twitter. Etsy. Yeah, didn't Etsy report? There's the Amazon poll I just posted in chat. Etsy, it's a company that's down a lot, and they also did bad on earnings. You know, but like I guess it depends on what their EPS and their PE ratio is. If we look at Etsy, for instance, here. Etsy is showing. Etsy's been profitable. Now their EPS ratio is showing. They're not showing a PE ratio. Why? Why? Let's see. See if we can figure out why Etsy's not showing a PE ratio. When we look at Etsy's quarterly earnings here, getting a bounce back. Look at Amazon all the way back to the 200 EMA, so bouncing back. It looks like it's had 4 profitable quarters. Let's calculate Etsy's PE ratio ourselves here. All right, so yesterday Etsy reported their numbers here. Etsy showing 93 plus, which is pretty good. It looks like plus 53 plus 77 plus 58, and this is the yearly EPS of Etsy is 281. Now when we look at Etsy's share price, $2.81, if we look at Etsy's share price, Etsy is at 83 bucks. So that gives Etsy the PE ratio has got to be really good. So again, 83 divided by 281, that's a 29 PE ratio. That's not bad for Etsy. You know, Etsy might be a buy for me personally. So I think I'm going to buy a little bit of Etsy here. PE ratio is not bad. Etsy, how much should we buy? 25 shares. Why'd it fail? Huh. Mm. All right. Well, I guess I gotta do it on toss. I gotta put another. I had to take $2,000 out of this Etsy or out of this Mumu account. So I've got like 24,000 in it right now. I haven't really been day trading on it, and so I was planning on making it like an investment account. But I guess they're not gonna let me take that trade now. I gotta wait until the money settles tomorrow, which I put right back in it. Anyways, I'll go ahead and buy a couple shares on toss then. Bought 15 shares of Etsy. I think it's reasonable. It's down a lot too. Apple dump. Pfizer at lows. Again, we got a little bounce here. We got a decent amount of votes on our Amazon poll as well. Again, so far on Aapl, 56.5% think they're going to beat, 30.4% think they're going to miss, 13% think they're going to come in as expected. Amazon, 63% beat, 29.6% miss, and 7.4% as expected. We also did a YouTube poll regarding all this stuff. 52% out of hundreds of votes, or out of over 100 votes, 51% think beat, 27% think miss, 22% as expected. Coinbase is mostly green on the day. I mean, it's slightly green. Nothing's really wrong with it. It's up a little bit. It's mostly been consolidating today and not super green day. Coinbase has had a pretty big run. So if we look at Coinbase, for instance, here, and we look at the yearly chart for Coinbase, Coinbase since June has been on a pretty big tear up. They release quarterly earnings as well. Again, you can kind of see Coinbase's big rise up. They've recently, back since really they started dropping since July, mid-July. They've been pulling back a little bit, but again, they've been on a nice tear. They were at $50. Coinbase was at $50 not that long ago. So for them to be at almost 100 is still very big percentage gains for them. So all good. Amazon is right here. And again, Amazon currently at 128.80s right now, 128.80s. I'm concerned with Semiconductor saying they had 25% less sales on chips for both computers and phones. I think the market sentiment is shifting to fair valuation with the 10-year at 4.1. How much of a percentage beat is for Coinbase? So Coinbase is expecting 78-cent loss per share on 170,000 in quarterly revenue. What? I can't imagine. That's a pretty low miss, man. That's a pretty big miss. So again, I'm going to re-say what I just said. Coinbase is expecting 170,000 for quarterly revenue. 170K. That can't be right, according to Earnings Whisper. That would mean that on a yearly basis, Coinbase is only making 680,000. No, I can't imagine Coinbase as a whole is making less for sales or revenue than $1 million a year. Maybe it's 170 times, What do y'all show for Coinbase expectations? Let me look somewhere else. I'll look on Mumu and see what they show. Again, let's figure this out. All right, so we're going to go to earnings. Let's find Coinbase. Microchip Tech also reported earnings. Moderna's out. Let me search for Coinbase is what I really got to do. So here's Coinbase. All right. Well, still learning to use Mumu, so bear with me. No, I'm talking about revenue expectations. Yeah, 629 million. Okay, got you. Yeah, whatever platform I'm using, which is Earnings Whisper, just looks like it's wrong. About to say, man, they have to make more than that. I'm not saying, 700K a year is not good, but for a publicly traded huge company worth $100 a share with a market cap, I would buy Coinbase. I don't trust it right now, to be honest. Again, Amazon on the right, been fighting back a little bit. Apple, when we zoom out some, I'm going to put a 3-minute chart on Apple just so you all can really see. Apple's mostly choppy today. I mean, this is the trend of Apple today, if y'all can see this. That is what we got going on today. Very flat, sideways range, neutral activity. Amazon, though, is moving up. Look at Amazon. Amazon on the way up, starting to fight back. Again, up to 129s. We'll see if this sympathy movement influences Apple too. Yeah. I mean, Coin looks like a nice. Again, Coin looks like a bull flag on the daily, and I think most people are going to be able to see the bull flag on the daily for Coinbase. The problem is that this is technical, and earnings don't follow technicals. Earnings are fundamental releases, and so it doesn't matter how good the technical pattern is. Earnings could wildly influence this or wildly cancel this out. Like, again, it could be the best technical pattern in the world. If earnings come in really bad, Coinbase is going to drop, most likely, So technicals are going to get trumped by fundamentals all day. So the bull flag does look good. It does look nice. We're on a little dip level. We're pulling back to a psychological level, like $90. It doesn't look bad at all technical wise for Coinbase. But again, I don't trust it. Let me know if you guys do. Your opinion on Apple? I think Apple's one of the best long-term companies to invest in personally. But again, it's just my own subjective opinion. I don't know what it's going to do long-term. I don't know. This is Mumu, which is a zero commission stock platform. You can also trade a bunch of stuff on it, but zero commission stock platform. It's open the entire time of pre-market and after hours as well, so I could day trade, swing trade, invest super early in the morning. Like TOS wouldn't let me take any orders super early. I couldn't trade on TOS before like 7. And so this is a zero commission stock platform. If you open up an account, there's a lot of cool stuff you could use. If you open up an account and deposit $100, you get 5 free stocks. Open over 1,000, or open and deposit over 1,000, you get 15 free stocks. Open up and deposit over 5K, you get the previous 15 plus Google or Tesla. And I got Tesla. And again, the resources they have is just really useful for traders. To be honest, I'll pin it to the top of the page if you want to check it out. Let me see what the PE ratio is for Honeywell. PE ratio is very cheap. Good. Again, Amazon still pushing up. Yeah, I'm not talking about futures. I'm talking about stocks. Like, I can't buy stocks before 7 a.m. on TOS. I can't buy stocks before 7. I got to wait until 7 a.m. to buy or sell anything, which means that, like, if I get up early and I see something dropping drastically in pre-market, I can't sell. You know, I don't like that. You know, again, Mumu allows me to trade starting at the very beginning of pre-market the entire day, the entire market hour session at least. So, I mean, I'm going to go with them. How bad will Apple affect the VIX? I mean, it's going to affect everything in the market. You got a little pullback for Amazon at the 200 EMA. Maybe a little buy argument there. Amazon worries me. Yeah, the only problem with Amazon is the PE ratio. You know, I know right now that, you know, they've had a rough few years in terms of earnings. The PE ratio right now for Amazon is 305, according to Benzinga. Let me look up the number. Let me calculate it myself just to make sure, because there's some other numbers that, like, I know they said AMD's number was super high, not Benzinga specifically, but a bunch of different places. But when we look at Amazon's PE ratio, it's going to be 60 plus 77. It would be $1.06 yearly EPS for Amazon. So Amazon's got $1.06 yearly EPS. Now, Amazon currently sits at 128, and so you would do 128 divided by 106, and you would get the PE ratio. Yeah, so it's not 300, but it's still pretty high for the trailing 12-month EPS or PE ratio at 120 right now, which is very high. To put it into perspective, like a good PE ratio, like a company that would conventionally be valued as, you know, reasonable priced, is going to be like anywhere between like 10 to 20. I would say, you know, if you're around 20 right now in this current market, I think you're doing pretty hot in markets, because again, if you're around 20, you're doing better than most right now. There's a lot of really extended, especially tech companies. So, you know, 120 is not good. When we look at something like Apple, you know, Apple here dipping down a little bit at around 191. I can calculate their PE ratio pretty easily also. And Apple currently, let's see, let me add all this up for Apple. 152 plus 188 plus 129 plus 120. All right, so that gives Apple a yearly PE ratio of $5.89 EPS per share yearly. On the year, they've made $5.89 per share. Now, when we take $5.89 per share and we divide it by 191, we get 32. All right, so again, Apple is not the worst one out there in the world. It's not necessarily cheap, but it's not crazy high like Amazon, you know? So like, that's the difference in pricing versus Apple and Amazon. Apple's margins are also a lot better than Amazon. If you look at it, like, for instance, when you look at like just their EPS versus their rev, you know, when you just look at EPS versus revenue, Apple is expecting 119 EPS. So $1.19 EPS on the quarter, and they're only bringing in 72.81 billion. So 72.8, I'm not saying that's not a lot, but okay, so 73 billion, we'll round up. So out of 73 billion in revenue, their earnings per share are about $1.19 this quarter out of that 73 billion. To put it into perspective on Amazon's margins and why they're worth, 34 cents is what they're expecting quarterly EPS. So per share, 34 cents in profit per share for Amazon. And that's on almost twice as much revenue. So 131.4 billion in revenue for Amazon. And so again, you can kind of see why Apple is just a strong company. You know, despite the PE ratio being a little bit high, I'd call it pretty normal right now. But again, that's what you want to watch when we look at like their EPS graphs and stuff like that. You can look at what Apple's been specifically doing for the last year and quarters and all that good stuff. So again, Apple has been on a pretty nice chart. Their quarterly EPS graph has been, it dips some quarters and it moves up some quarters, but it's mostly been solid. So you can kind of see it increase here over time. Here's the yearly 12-month EPS moving up over time. Now, when you look at something like, what else is there to look at? We can look at, I think I got too many screens up. Hold on, guys. Let me exit out of that. Exit out of this. Exit out of that. Exit out of that. All right, so we had to clear some memory. But again, here's Apple. Now we look at Amazon. Amazon has had a much less consistent year here. You can see in the last 5 quarters, they're losing on 2 of the last 5. They're green on the last 3, but slight green. And in terms of revenue, or in terms of yearly revenue, they've struggled there too. Now, again, we compare that to Apple. Apple looks much better than this. We can also look at Coinbase, which also releases earnings today. Here's Coinbase. Coinbase has been a struggle, although, we see some optimistic signs for Coinbase, specifically that, we had the crypto correction. They've been having improving quarterly EPS for Coinbase over the last 4 quarters. They've all been improving. This next one is going to bring it pretty far down, though, but, it's not going to be that bad, but it's still going to be out there. So, again, Coinbase expecting 78-cent loss per share. So, they're going to bump this up a little bit relative to the last few quarters, and that's basically the market right now. We can also look at SQ. Here's SQ. SQ doing the same thing. SQ has not had a profitable quarter since 21. They have not had a profitable quarter since 21. They haven't had a profitable year since 21. So, Cash App, SQ, again, they're a question mark here, I think, as well, with all the stuff going on. What do you guys think? So I'm screen my flash a little bit. I'm exiting out of stuff over here so I can hear my computer just struggling. That should make it a little bit easier. Falling knife strategy. I'm so scared, not going to lie. For what? Amazon Mark, thoughts on SQ? Well, SQ is just basically shorting. Y'all ready? Let's look at our polls. We got polls for both Apple and Amazon numbers. Again, out of Amazon, most people are still expecting beat. 72% think beat, 23% think miss, 4.5% think as expected. We can look at our YouTube polls as well. 52% beat, 29% for Apple. Miss, and 20% think as expected. I'm more confident long term in Apple, but of course we don't really know what we're going to get. Again, Amazon at 128.90s, 128.90s. Got a decent amount of people here already, guys. We still got 15 minutes before the closing bell. We already got 250 people here. Take the time, hit the subscribe button. I personally had enough fun with Tesla and Netflix. I'm just interested because I believe we need a good showing from Apple so the market can catch. Yeah, I mean, the last couple big tech stocks that dropped earnings, right? The last few that were big that dropped earnings kind of saved the market. You know, the last time Amazon and Apple released their earnings, and Microsoft as well, the market had been on a leg down leading up to it. And so with today's stuff coming out, you know, it could be a situation where they help or kind of pour gas on the bleeding market. And again, we'll see. Tech, a lot of people have been saying, is incredibly extended on the upside. I think the PE ratios in a lot of tech companies are showing that as well. And so I think we're in a state of the market where, you know, we got a lot of stuff that's down, but we also have a lot of tech stocks that's kind of dragging the S&P 500 and the NASDAQ up. So Apple will beat like they always and then blame chip shortage or some excuse and the stock will tank. Wall Street never fails. I'm going to remember you said that, Car Mike, and we'll see if you're right, bro. Maybe you are. I don't know. Apple will probably pull back like the rest after earnings. I bought heavily leveraged on the VIX. A bear short-term, medium-term, and credit downgrade. I bought heavily leveraged on the VIX and put options on the NASDAQ when it was at 1580, 850, and 2 days later the downgrade. Yeah. What I've been taking the time to do lately is just establish a long-term portfolio. I've been diversifying into companies that I think are going to be fine long-term, but are also extended on the downside short-term. So I bought ExxonMobil, I bought Walgreens, I bought Tyson Foods, I bought Target, I bought Snapchat, I bought RTX, I bought Roblox, I bought PayPal, I bought Microsoft, I bought Honeywell, I bought Gold, Google, General Mills, Etsy, ENPH, Disney, which is I recently bought it back in today. And now we're just kind of sitting, but this is kind of a long-term portfolio. You know, and I am taking some size here. Now, again, since prior to this portfolio, I had been using TOS to day trade. But again, I'm probably going to switch it to a long-term investment account. I just started trading. Any advice? Trade small. Don't buy a course. Don't be sold by a get-rich-quick pyramid scheme. Understand that you'll probably lose if you try day trading, and trade small when you first get started, or use a funded account program. Funded account programs are useful because they limit your risk for day trading when you first get started. If you're investing or swing trading, remember, avoid penny stocks. The biggest edge you'll ever have universally in the stock market is long-term value investing. You buy and research healthy companies. You buy and you sit. That is the most effective way of that's the most effective way of finding any edge in the market. It's how most millionaires are made, believe it or not. It's just by buying and holding stocks. And, you know, there's a lot of shiny stuff around. You got to learn to just, you know, again, you can get good at day trading. You can be good at investing. You can be good at swing trading. Most of the content you're going to find is publicly available for free already. You don't need to buy a super expensive course or join some super expensive mentorship program from some dude flashing a Lamborghini that he probably rented to try to sell you a course. Ignore most people like that and just kind of learn and digest content that's free. And again, subscribe to our channel. We appreciate it. Costco. Yeah, Costco is up too much for me to buy it. I mean, long term, it's still going to be fine, I'm sure. But like short term, that thing's had a year, you know. Uber maybe. I think Uber is going to change the world and already is. And I think that's a fine addition to a long term portfolio. It's up about 100% in the last few years. You know, Uber's not that bad, though. Again, Uber's got monetization problems, but I think when you're a groundbreaking company like them, you know, it is what it is. Where's my phone, man? I just heard it. Oh, there it is. Hey, thanks, Pawn. Got your Discord message. All good. Yeah, thanks, man. Amazon still holding at the VWAP. Y'all want to see why I watch the volume weighted average price? This is why I watch it. Like, look at the VWAP all day today. If you were just watching the VWAP to identify a trend and waited for a pullback to around that VWAP level, bounce, 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 bounce. Mixtape coming soon. Bounce, bounce. Like, look, like if you just sit around waiting for the VWAP to identify trend, even if you use the VWAP and 200 EMA, bounce at the 200 EMA, bounces at the 200 EMA, you know, dipped under it, Again, the reality, if we break under the VWAP and the 200 EMA, that's when I'm like, all right, downtrend, you know. But until we break underneath both of those milestone levels, I'm usually okay sitting in whatever it is. How can I make quick money tonight? Sell your house, bro. You know what I mean? I don't know. That's not how the stock market works, sir. You know, I mean, listen, I could tell you it's a get rich quick scheme and then sell you some sleazy course on publicly available content that I mostly pinned together from a bunch of articles and nonsense. I'd rather just be honest. There's no easy money in the market, bro. There's no easy money in the market. If you try to make money today, you're going to be pushing and forcing a trade and gambling essentially. And it's probably not the right move. Yeah, you can make money. You could also lose money. You know, so be smart, man. Yeah, buy the lottery. You know, you could make money. You'll probably lose money though, you know. Yeah, but the market's not really in a recession though. Again, if we go by purely GDP, you know what I mean? Purely GDP. GDP came in a couple weeks ago at like 2 point something, if I remember correctly, right? And so GDP is not losing quarter to quarter, and the technical definition of a recession is two losing GDP quarters. You know, again, regardless of whether you want to add the unemployment aspect, which I know was like a big controversy because they were like, oh no, but like unemployment's pretty low and standard as well. It's not low, it's not bad. Unemployment's not super high. GDP's not losing quarterly. And so, I mean, regardless of anything else, we can look at those two indicators of a recession and see that we're not really in one. I think the stock market is very telling of that as well. If you look at the market rip over the year, it's up a lot in 23. So, I mean, again, I'm not saying we're not going to hit a recession, but we're not there yet. And I will kind of agree that it could be time for a pullback in markets, but that doesn't mean a recession. Those are two different things. Pullbacks are healthy, you know. In the market, if you zoom out of the market, like if we put up like the SPY right here, the Q, you want to look at like the NASDAQ. Here's the SPY, right? If you zoom out of this fully, you'll see we're only slowly getting back. Like we were in a pretty big drop. Like if you look at the charts, it looks more so like we're coming out of a crash than actually being in one. You know, because again, what happened in 2021 and 2022, early 22, is we got this pretty big dip in market activity. SPY dropped all the way down to this 340 level down here. You know, that was a pretty big drop. A lot of people were doom and glooming it, saying the market was going to crash and it was the end of the world, you know, and everybody was upset and scared. And then the market ended up just kind of ripping all the way back up and pushing up now. So again, I'm not saying we don't hit a recession. I'm not saying we don't crash. What I am saying is that the market looks like it's coming out of a mini crash more so than going into a crash, or you know what I mean? And so again, I don't know. I don't know about the UK. I'm using Mumu. I'm not sure if you can use that in the UK. All right, guys, we got 6 minutes. 6 minutes before the data release. Over 400 here. Take the time, hit the subscribe button. Apple earnings aren't going to drop. We got a bunch of stuff coming out, man. We got Apple, Amazon, Coinbase, Airbnb, DraftKings, Cloudflare, Fortinet, Context Logic, Amgen, Gilead, WW, BKNG, DigitalOcean, Redfin, Corsair, EXP, Motorola, Rocket, Goldman Sachs, BDC, Main Street Capital, Yelp, TransPanion, Dropbox. Honestly, we got a bunch of big earnings today. Believe it or not, Amazon's starting to rip back up though. So here's Amazon starting to move. Apple's starting to bounce back as well. But Amazon basically bounced back from the VWAP, went right back up to 129.60, 129.60. I just started investing. What should I buy? I don't know. Who knows? I mean, again, the best odds that you're ever going to have is buying blue chip healthy companies and sitting on them long term. That's the best odds you'll ever have. Coinbase is expected to release earnings. Again, they're expecting a 72 cent. Wait, what is it? Coinbase expecting 78-cent loss per share. No one talks recession anymore. Yeah, man. Hey, thank you, Charles. I appreciate the love, brother. Thank you, man. Harland Irving says, beginner trading. Why, when I gamble an option and I look at it on market open, I'm losing money? Dude, I don't know if this is a serious question, man, but like, how would I know why you're losing money in an option, bro? I guess the overarching point about what I'm trying to say is that options are incredibly nuanced, man. You got to learn the Greeks. You got to learn it. They're so specific. It's not like I'm going to have just a generalized view on, hey, you bought an option, you're losing money. I have no way to answer that, brother. No way to answer that, man. Hope you understand. Again, options are incredibly tricky, incredibly nuanced. And again, that's too little information for me to know anything. All right, guys. Hey, 3 minutes, 3 minutes. All right. Again, 2.5 minutes. Apple pop it up a little bit. Amazon pop it up. Apple's not scheduled to release theirs until 4:30. Who knows when they'll actually drop it, but 4:30 is when they're expected. Again, we're also going to throw this bad boy in sub-only mode. So if you haven't already, listen, guys, take the time. Hit the subscribe button. You know you want to. Try it one time. Amazon bouncing up a little bit at 129s. Still got a couple minutes. Again, Amazon is scheduled to release theirs right at 4 p.m. in about a minute and a half. They're expecting 34-cent EPS profit on 131.42 billion in revenue. So again, that is what they're expecting right now. Again, in about a minute or so. About 2 minutes. I'm sorry. About 2 minutes is what we have until this release. Do you think high interest rates in Europe are impacting the U.S. market? To a certain extent, sure. But I think it's mostly the other way around. But to a certain extent, sure. Amazon will skyrocket, maybe. Apple's volume reached recent new low in the past. This led to increase in price. What do you think? Maybe. Amazon ripping back up to 129. I mean, I think that's possible, but who knows? You know, history. Mark Twain famously said, history doesn't repeat itself, but it definitely rhymes. And so maybe. Apple up to 121.75. Again, we got 1 minute left, guys. 1 minute left before this release. All right, so here we go. 30 seconds, guys. 30 seconds. We got about 700 people here. Yeah, I mean, I don't know whether the market crashes or not. Again, I really don't know. What I'll say is that universally, the market is in a constant state of, yeah, bud. Here, no. Here, buddy, I gotta go. I got 10 seconds. I love you, buddy. You gotta get out. Here, Jack, I don't have time to talk to you right now. I gotta go. I love you. Get out of here. Thank you, sir. All right, here we go. Here's Amazon earnings right here. Again, watch Amazon. They're supposed to drop theirs right at the closing bell. Right at the closing bell. There's the close. Let's watch Amazon closely here. Watching Amazon very closely for their release. No real movement here for Amazon yet. No real movement here for Amazon yet. Watching for it here, guys. Watching for it. All right, no movement here. Waiting for Amazon. Still nothing out. Amazon up to 129.50s actually right now. Retracing all the way back. No earnings yet though. All right, there's Amazon popping up. Amazon up to 135.30s, guys. 135.30s on Amazon. A big move here. Amazon up to 133.90s, 135s right now for Amazon, all the way up to 134s. Initially, a very good reaction from earnings here. Again, bear with me while we report these. Amazon up to 136 right now, 136. They did drop numbers. Net sales came in at increased 11% to 134.4 billion. That's much better than the 121.2 billion in the second quarter. North American sales are up 11% year over year to 82.5 billion. Operating income increased to 7.7 billion. Amazon is ripping up big here, guys. Amazon's second quarter sales showed 134.4, beat the 131.54 estimates. There's the numbers right here. EPS came in at 65-cent profit per share versus 35-cent estimates, and the market is loving this. The market is ripping up big. Beat on both metrics, increase in the rest of the data as well, and we'll put this number up on screen. But yeah, big increase on Amazon, up to 138 right now on Amazon. 138, huge move up here. 138.14s now. This should drag the rest of the tech market up, I think. It should drag the rest of the tech market up. I mean, we never really know, but it should drag the rest of the tech market up. Yeah, thank you, baby. I love you. There's a pullback to 136s. 136s. Again, big increase, beat on EPS, beat on sales for Amazon. We had a bunch of other metrics dropping. We also have, let me look at Coinbase, which is scheduled to release theirs in about 3 minutes. Nothing else for Coinbase. SQ, DraftKings also releasing theirs today. But looks like Amazon is the first one to come out, and it was a big beat at 136s right now for Amazon. We still got a couple minutes before the rest of them. Most of the other ones drop at 405 or 410. Apple does drop theirs at 430. Again, Amazon second quarter sales 134.4, better than 131.5. Second quarter EPS 65 cents, beat the 34-cent estimates. Second quarter sales are up 11% to 134.4 billion. Second quarter revenue beat expectations. Amazon Web Services sales up 12% to 22.1 billion. They see third quarter revenue coming in slightly lower than expected at 138.25 billion versus 148 billion expected. So here's one thing that might be relevant. Again, Amazon guidance came in a little bit low here. Please stop spamming Corsair. Corsair is one of the smallest stocks. Oh, no, I'm sorry. Amazon guides better than expected here. So Amazon guidance came in way better than expected. I'm sorry, I was wrong about that. Look at their guidance numbers. Again, that should really drastically push Amazon up here. Big move up to 139s for Amazon. You know, so Amazon is up like, realistically, Amazon's up like 8% right now in pre-market, 7%. There goes Aapl pushing up. I don't know if this is just sympathy movement with Amazon. I don't think Aapl is scheduled to drop theirs for a few minutes here. But again, in about 30 seconds, we should have Aapl. We're also going to throw this in sub-only mode. So everybody announce yourself. Show us if you're subscribed. We appreciate it. Right, again, Aapl up on sympathy. Amazon with a rip, man. What a big move for Aapl, for Amazon. And again, let me know your thoughts on this. What a big move. Again, another day where earnings came in helping the market when the market was down. Again, Apple's still pulling back. Apple's the most heavily weighted stock on the S&P 500, so still relevant. And we still got a couple minutes before Aapl numbers. I'm going to put this on screen. There's 305. So we did actually get a list of earnings that just dropped. Let me get this out the way. We'll get the other one up in a second. We got 25 minutes before the other ones drop. But again, there's Aapl. Again, Coinbase 410. I don't know if Coinbase. I don't think Coinbase is out with theirs either. SQ, Block. Doesn't look like Block is out with their numbers either. There's Amazon pulling back some now. Airbnb, BDPS, beat sales. We'll put those numbers up in chat. Again, now we're dipping down a little bit on Amazon. Apple's still up a little bit from this release, though. Again, so Airbnb came out better than expected. Beat sales, beat rev. Amazon pulling right back down to the volume weighted average price. DraftKings, not out with theirs yet. I don't know when DraftKings is scheduled. Coinbase still not out with theirs yet. But man, what a rip on Amazon. Let's see if it holds. I wonder how much AI they're going to push out. Yeah, so again, we're reading all these different reports on Amazon here. Again, they guided better than expected. They swung to profit in the second quarter, 65-cent EPS versus 35-cent expected. Third quarter revenue came in, again, for guidance at $148 billion versus $138 billion expected. So much better guidance. Amazon bouncing at the volume weighted average price. And again, you want to know why I'll watch the VWAP here. Again, it's very easy to see why I'll look at this indicator. We got a lot of content on it. You check out our video content if you haven't already. But look, we pull back to the VWAP, we bounce a little bit. Even if we continue down, we got an initial bounce here at the volume weighted average price. And the reason we do is because traders watch that level. All right. Now we're just kind of hanging until something else drops. We got a couple dropping in about 2 minutes. Specifically, Coinbase is scheduled to release theirs at 410. They're expecting a 78-cent loss per share. So relevant to the crypto market coming soon. All right, guys. Hey, we got about 1,400 people here. I think we probably just broke 112,000 subs. Bouncing right at the volume weighted average price. So I think we just broke 112,000 subs. Oh, no, we need 13 more subs. Just me saying this right now. By the time I'm saying this out here, again, hit the sub button, guys. Again, realistically, we need 12 subscribers. Again, I'm just going to assume we hit that already. Again, subscribe if you haven't yet. Again, all the content we put out there is free. Like, my idea for this channel was always to give people a free resource where they didn't have to pay money. There's no paywalls behind my content. You don't have to pay for anything to get the base of our content, which is just reporting economic data, earnings, explaining it in an easy to digest way for new traders. And again, that's the whole point of this channel. We didn't want to be a guru selling courses. We didn't want to be a sleazy guy just out here slanging courses on publicly available content. We wanted to report everything for free. Of course, we got sponsors, but again, I truly do appreciate the love and support this community has for us. And yeah, we just broke 112K. So thank you so much, guys. We appreciate it. Let's keep the growth up. Whoa, look at that. I don't know what just happened. I don't know if this was a glitch or in the chart. No, that was a real wick here. Weird. Amazon back up to 138s right now, guys. Back up to 138s. Crazy move just now. Again, we're watching Apple here too. Apple is up a little bit, but again, probably just sympathy from Amazon here. Amazon back up to 138s. Again, Apple is scheduled to drop theirs at 430. Hey, thank you, Fish. Thank you, Mickey. Hey, thank you, Coach. Thank you, Ryan. Knows real estate. Thank you, V. I am using Mumu right now. Again, if you want some free stocks, Mumu, zero commission stock trades. They're open the entire time in pre-market, and I really do use them to find like economic data. Again, here's all the earnings that dropped today. Tomorrow, we've got like big economic data dropping, so I can go to North America since it's U.S. data, 3 stars, so I can see only the big ones, and you can see tomorrow we have non-farm payrolls and unemployment dropping tomorrow. I can look at IPOs, dividends, see bank holidays and stuff like that. I can look at options and get free unusual option activity, a free heat map for stocks. Paperfolio lets me like follow different traders, see what their portfolio is, see which ones are actually performing well, and then mimic their portfolio. Really useful. A lot of stuff. Again, zero commission stock and options trades. And if you open up an account, deposit $100, you get 5 free stocks. You open up an account, deposit at least 1,000, you get 15 free stocks. And these are full shares, not half shares or anything. These are full shares. You open up and deposit over 5K, you get all those stocks I just mentioned, plus either a share of Google or Tesla. And I got Tesla, and I think it's gone up since I got it. But again, if you want to check it out, they are a sponsor of mine. It's completely free to sign up. Check it out. There's the link. Coinbase should have just dropped their numbers here. Let me see what they showed up here. And again, this is going to be an influence over crypto. I don't think Coinbase is out with their numbers yet. Again, there's Amazon on the right. Here's Coinbase. Coinbase is up, though. Maybe it's up on sympathy. Apple's still kind of hanging out. Again, Coinbase, actually, it looks like they're up with theirs. Let me look elsewhere. Again, Fortinet just dropped theirs. Airbnb is up with theirs. Coinbase ripping up to 95.30s here, guys. 95.30s. Here's Coinbase. They came in at a much smaller loss than expected for Coinbase. Here's the numbers right there. Coinbase showed 42-cent loss per share. They expected almost 80-cent loss per share. And they are flying up on this data as well. Look at Coinbase on the right. Huge move here. Again, Coinbase up to 97.70s. Again, better than expected revenue as well at 0.66 billion versus 0.63 billion expected. Coinbase up to 98s right now. Again, all we really need here is Apple to come in well, and then that could spark a huge bull run and everything. So again, Coinbase up big to 99.60s, Apple up to 193s, basically on sympathy there. Coinbase up to $100, just tested 100. And again, you can kind of see Coinbase numbers in the chat. These are big movements here. Again, Apple earnings are going to drop at 4:30 in 18 minutes, guys. 4:30 in 18 minutes. Gilead came in at 134 versus 164, so they missed. Coinbase still testing the top range here. Still no Apple numbers yet. Fortinet came in better than expected EPS. Revenue came in slightly lower. Airbnb, BDPS, beat Rev. Striker, BDPS, beat revenue as well. Again, Coinbase right around $100. Mostly bullish action right now in markets. Yeah, I'm not saying Apple's going to spark a bull run, but I mean, again, with most of these coming in better than expected, the market's flying up. Tesla new high. Yeah, maybe Tesla sympathy here. Tesla up to 260s. Yeah, we still got 18 minutes before Apple and Amazon, guys. 18 minutes. Yeah, Tesla is ripping up. Looks good. $260.20s here. Amazon chart looks pretty good too. Again, we're waiting for Apple. Apple's scheduled for 4:30 market time. So again, here's Amazon still doing pretty well here. We'll put a 1-minute chart up. You can kind of see Amazon's move in pre-market right now. Pretty big move. Coinbase is the latest one. Just broke over $100 a share. Let's see if this influences Bitcoin. Bitcoin's up a little bit, up to 29.5K. DraftKings come out yet? Square? Yeah, let's look at Square. So Square did have a pretty good report as well here. SQ. One of my favorite strategies lately, guys, to be honest. One of my favorite strategies is buying up these One of my favorite strategies is buying up these Hindenburg short report numbers and just buying the dip. Buying the Hindenburg short report dips because, again, this happened with IEP. Did IEP drop yet? Again, happened with SQ as well. And again, people were hating super heavy on me when I bought SQ, when it dipped after the big Hindenburg drop from like 80 bucks down to 50. People were hating heavy when I bought it up. It ended up bouncing back like 80% in the last couple months since I did that. And again, how you like them apples? But again, that's a nice little strategy I've kind of developed. Wait for those Hindenburg reports. They usually drop a little bit too heavy, and then buy that dip. And again, SQ up to 78 bucks. Still waiting for Apple. Coinbase dipping down to 97s. Again, remember, Apple drops theirs at 430. Remember, guys, Apple releases theirs at 4:30. At least that's when they're scheduled to. So again, we're going to put these numbers up so you can kind of see everything going on. Again, so far, Apple pulling back, some at 192s, but again, up still in pre. Coinbase ripped all the way to 97s. Amazon all the way to 137s. DKNG. DraftKings is out. EOG is out. Square is out. So Square showed 39-cent EPS versus 36 expected. Revenue of 5.5 versus 5.1 expected. Processed 59 billion in GPV in the second quarter, is up 12% year over year. DraftKings lost 17 cents a share. They originally expected a loss of 25 cents per share. They showed revenue of 875 mil versus 760 expected. Monthly unique players is at 2.1 million. They expected 2.07 million. So everything was better than expected in that regard there. Amazon's still surging up a little bit. Coinbase is dipping down some now. But SQ is up as well to about 77 bucks. We'll see if Apple can break 200 today. I think it's certainly possible, but again, we'll see. Who knows if we will or not. It's possible we do. But yeah. Amazon surging up too. Looks good. Yeah, I mean, Coinbase pulling back a little bit, but it didn't have a crazy big run. But it is dipping down to 95.60s. Here's Amazon. Amazon's still popping back up at 137.95s, 138s for Amazon. Just tapped it. Again, thank you guys so much for helping me hit 112,000. We appreciate the love so much. Thank you. All right, guys. Again, so Apple has Q3 earnings, I believe, right? Let me make sure. Yeah, I'm pretty sure it's Q3. Yeah, Apple Q3 earnings. Still waiting for that release. Amazon's still ripping up, almost up to 139s right now. SQ still pumping too. Apple a $3 trillion stock, going to be difficult to hit 200 a share on earnings. I mean, we're primed for it. It's not going to say we will. I mean, it still moves a lot though, and I don't know if it moves that much. We're pretty close. The lifetime high for Apple is 198.20s. So 198.20s is the lifetime high for it with this most recent split. And so we're at about 193s. Apple's still pushing up. Amazon's still popping up with us as well. And also, guys, remember, if you haven't already, check out TopStep. TopStep is a funded account program. So if you want to day trade, right, the way to do so with limited risk is a funded program. TopStep's the most legit one in the world. They pay out millions, fund thousands a year. What they do is they give you a demo and they test your skill. So the base one, they give you 50K. In the futures market, there's no PDT rule. You could day trade short in futures, buy market, buy bid, sell the ask, just like stocks. But you're day trading the S&P 500 and what's called the E-mini. You can day trade the NASDAQ. You can day trade currencies, gold and silver, and there's no PDT rule. And again, they give you a demo. If you can hit 3K in profit without losing over 2K on that demo, they fund you 50K with a 90% split. They're the most legit one in the world. And again, they've been growing like crazy, so they've had a little bit of growing pains lately, but a great way to learn how to trade with limited risk. If you lose, the base combine's $49. Again, for that $49, they're going to give you a 50K demo and test your skill, and it's a great challenge that builds your skill. And if you're good enough to pass it, 90% split, you get to keep your first 10K in profit. And they've got free funding coaches, a great Discord community, just really useful for traders. And for $49 for the base one, it's an obvious thing. But again, they're a sponsor of mine. They pay me money. I'm certainly biased in their favor because they pay me money. But again, I think it's genuinely useful if you want to learn to day trade, and it limits your risk. So you still have some pressure. You still got to learn, but you're not risking thousands like you would. So it's a great way to check it out. Here's the link. Yeah, I mean, there's no options with them. It's mostly just futures. Oh, damn. So Top said, due to the overwhelming demand we have been experiencing as a result of our one-step, one-rule program, we have temporarily paused all new memberships and have opened a wait list. Our goal is to focus on supporting all current members to ensure their experience and meets and exceeds their expectation. We have all hands on deck, and this is our top priority right now. So yeah, my guess is you'll probably be able to get in. Check out the link. You'll probably have to wait to get in, though. Again, they've gotten so many big signups because it really is like the best rules and all that stuff. But yeah, just hit the link if you haven't checked it out yet. No, he's probably talking about the notification sounds that I get, which it is on my end. I'll mute pawn so it doesn't keep making noise on my end. I might mute it for a little bit longer. Let me see. I'm gonna mute you, pawn. I'm not ignoring you. I'm gonna mute you for a little bit so it doesn't keep coming up on stream. Apple, guys, we're still waiting for Apple. Apple's scheduled to release theirs in a couple minutes in 7 minutes for Apple. Still waiting. Again, Apple is ripping up at 194s. Crazy bull action here today, man. What a crazy run for Amazon and Apple today, guys. Look, here's Amazon all the way up at 138.50, right around the highs of the day. And let's watch this high of the day level here. Look at this. Let's watch that level. And then Apple just moving up in sympathy because, I mean, they're both big tech stocks. Crazy big pump. Again, Apple's scheduled to release theirs in about 5 minutes. All right. Still sitting back less than 5 minutes. All right, guys. Again, we're sitting back. Amazon pulling back to 138s here, guys. 138. Still got 5 minutes. Watch Apple. We should see some big volatility when the numbers come out. Still nothing yet, but Apple and Amazon are up a lot. We got over 1,500 people here, so we appreciate the love and support. Thank you guys so much. Again, we did just break 112 subs. To be honest, we're almost up to 112.1 subs now, so we almost got another 100 past that. So again, hit the sub button, hit the notification bell. We appreciate the love. Let's keep the growth up, guys. Waiting for Amazon and Apple, or Amazon's already out. Beat on EPS, beat on sales. Almost everything beat earnings. Again, just to give you some perspective in what happened today. Coinbase beat EPS, beat revenue. We can keep going here. So Coinbase beat EPS, beat revenue. Block beat EPS, beat revenue. MCHP missed EPS, neutral revenue. EOG beat EPS, beat revenue. Again, SQ beat EPS, beat revenue. Coinbase beat EPS, beat revenue. Fortinet beat EPS, missed revenue. Airbnb beat EPS, beat revenue. Striker beat EPS, beat revenue. Gilead beat EPS, missed EPS, beat revenue. Amazon beat EPS, beat revenue. Much better guidance for Amazon as well. Amgen beat EPS, beat rev. And so we had a lot of stuff that beat. DraftKings beat EPS, beat revenue. And so again, a lot of good stuff for stocks right now. A lot of good stuff. All right, guys. So again, Amazon up to 138.50s. Still pumping. Still waiting on Apple. We still have 2 minutes left, guys. 2 minutes left for Apple numbers. Coinbase beat EPS, beat rev. Again, y'all subscribe. We appreciate it. Numbers are about to come out right now, so y'all be safe. And let's see what we get. Here's Apple on the left side. Right around 194s. Right around 194s at 193.70s right now. Amazon just looking really strong, too. No, not yet. I'm sorry, David. What is this? Oh. All right, I'll eat it. All right, thank you, baby. All right. My wife made some ceviche. Is that how you say it? All right, look, I got less than a minute before Apple drops their number, so I'm gonna eat this, and then I really gotta focus. All right. That's good. Thank you, baby. All right, I gotta go. I love you. All right, guys. Apple. 30 seconds left before Apple drops their numbers. Apple pulling back a little bit ahead of numbers, ahead of the release. Amazon's still very strong. Again, Apple currently, guys, is expecting 119 EPS. Again, 119 EPS in profit versus 72.81 billion in sales. So here's the release right now, guys. Make sure you hit the live button next to the play button to make sure you're fully caught up on stream also. All right, there's the release. All right, watch for volatility right there. It's already volatility's coming in. There's the release right there. Apple up big. Up to 196s for Apple right now. 196s for Apple. Consolidating back down a little bit. All right, so here's Apple's numbers. Apple is out. Apple is out. They posted quarterly revenue of 81.8 billion, better than the 72.81 billion expected. Earnings per share was $1.26 versus 119 expected. Better than expected EPS, better than expected sales, and Apple is up to over 195s right now, over 195s. So again, Apple beat on both. Here's the numbers right here in chat. Starting to pull back a little bit, but there's the Apple numbers right there. We'll see what they showed for guidance and everything else. They said our June quarter year-over-year business performance improved from the March quarter. Our installed base of active devices reached an all-time high in every geographic segment. Again, they showed third quarter EPS of 126 on revenue of 81.8 billion, better than expected universally. And again, they pulled back a little bit. Now they're moving up. Now remember, they're already up a little bit in pre-market from Amazon's release in sympathy. And so it's very possible that Apple doesn't have a big green move from this, but they did beat EPS. They did beat sales. And so far, they're still technically green on the day right now, or at least close to it. So again, they said during the quarter, we generated very strong operating cash flow of $26 billion, returned over $24 billion to our shareholders, and continued to invest in our long-term growth. Tim Cook says, we are happy to report that we had an all-time revenue record in services during the June quarter, driven by over 1 billion paid subscriptions. And we saw continued strength in emerging markets thanks to the robust sales of the iPhone. And again, that is from Tim Cook, the CEO. It is dipping down a little bit, though. It's down to 190s here. So maybe Apple is already extended again. We're pretty flat on the day, but we'll see if we do something here. The earnings call is scheduled to be released in about 28 minutes. All right, guys. Apple down to 189s, guys, 189s. We do have the full earnings call starting here in about 28 minutes, 27 minutes. So Amazon green, Apple red from the earnings report. And again, the full earnings call is going to be streamed live pretty soon in less than 30 minutes. Again, thoughts? Let me end this poll. Since we asked people, does Apple beat or miss? Let's ask the question. Again, we got about 1,200 votes. Does Apple rebound today? Apple bounced back today. Yes or no? Does Apple bounce back today? Vote on the poll. We are down slightly on this, from the earnings report, but it's pretty flat, pretty neutral. Amazon's still creeping up pretty high there. Again, let me know if you guys think they're going to do good or bad. Yeah, I mean, we pull back enough for Apple. I'll probably buy more, but are you buying the dips? Let me know. Let's do a poll here. I think I got to exit out of stuff. One of my favorite strategies is waiting for a stock to report earnings, and if it dips really big, buying the dip. I don't think Apple is a dippy enough dip. It's definitely one of the top 3 dips ever, but yeah, I don't know if I'm going to buy this dip right now. Again, it's not big enough. I need a larger pullback if I'm going to add more to Apple, that is. So again, tomorrow we do have unemployment and payroll numbers released. All right, again, hit that subscribe button if you haven't already. Are we in sub only mode? We are. Good. All right, guys. Honestly, the ceviche that my wife made is actually pretty good. Apple usually drops a few bucks during earnings, then pull back is what I've noticed. Yeah, I mean, that's kind of what it did. Again, though, like when we zoom out on Apple, a lot of times, like people are getting baked into potential reactions and earnings. And when you've had a good enough year as Apple, like this is since January, here's January right here for Apple. And, look at the move. This is just 2023. It's a pretty big move. And so when you're that up on the year, it's not a surprise that even though they beat EPS, they beat revenue, it's not a surprise that they're not flying right now because, again, they're just up so much already. Catch back up on chat. Again, we're going to stream the whole earnings call in a couple minutes. Is Coinbase crashing? Coinbase down to 87.90s here. 87.90s for Coinbase. All right. Again, we got about 20 minutes. Coinbase is actually pretty flat on the day despite the upward move it made. Coinbase closed the day at 90.58. It's at basically 89 right now, so it's pretty flat. It's down a little bit. Let's see if there's a reason. So Apple Q3 Japan sales came in at 4.82 billion versus 5.68 billion expected. Again, you can kind of see those sales were a little disappointing. American sales came in at 35.4 billion versus 35.2 billion expected. So better than expected there. Europe sales came in at 20.2 bill versus 19.9 expected. The CFO iPhone sales came in at 39.7 billion versus 39.8 billion expected. So iPhone sales came in a little bit light. Mac sales came in at 6.84 billion versus 6.36 billion. So Mac sales came in much higher than expected. iPhone sales were a little bit light. In Apple and Japan, Apple in America and Japan revenue is down year over year. Europe and Greater China is up, which is good, which means they're growing overseas, which is good to see. Third quarter iPad sales came in at 5.79 billion versus 6.36 billion. So iPad sales were low. Services sales came in at 21.2. Again, 21.2 for service sales versus 20.8 billion expected. Apple said, quote, our installed base of active devices reached an all-time high in every geographic segment. So again, there's good and bad things here. They had better than expected EPS, better than expected sales, better growth overseas, but less than expected Q3 iPhone sales, less than expected Japan sales, and again, growth overseas. Yeah, I mean, Apple, regardless of what it's doing right now, is still a stock. Again, when you look like this on the year, a drop like this is not the end of the world. You know what I mean? Like even right now, where we're currently at in terms of price right now for Apple, Apple's about right here in price. You know what I mean? So like realistically, if you continue in this trend that we've been in, it would make sense to go like that. But again, nobody knows. That's just technical speculation. And so we don't know if we're going to, we don't know if this is good or bad. But like, again, if you're going to buy Apple long-term, you'll probably be okay. But again, I don't know for sure. Nobody does. Always buy the dip. 30% of the time, I always buy the dip every time. And so we'll see what happens, guys. Again, Apple, Amazon did great, up a lot. Apple, better than expected EPS and sales, but down a little bit from their earnings report. So I guess people were not impressed by Apple's numbers as much as they wanted them to be. Whenever something seems like free money, it's bound to fail, and Apple is like that too. Too many people. I mean, listen. I'm normally pretty big of a skeptic. Like I'm typically a skeptic in all things, right? Like I don't trust people. I don't trust things. I'm very skeptical of a lot of things. I definitely don't trust people, you know? And again, I mean, I don't know. But Apple is one of those stocks that, you know, they always say when in doubt, zoom out, right? And Apple and other tech stocks do look a little extended short term, right? But when you pull up a long-term chart on Apple, like a long-term chart on Apple, I mean, it's hard not to think that's a good investment. Again, you buy Apple 20 years ago, Apple's at $1 a share. You know, it's currently at about 200. So you buy it 20 years ago, you're going to 20x your money in Apple. And of course, hindsight is 2020. But like when I look at stocks, you know, there's a couple mind thought processes that I use when I look to invest in things long term. One of them is simple. Look at Apple stock. Do you think Apple has a reasonable chance to be very successful 10 years from now? If the answer is yes, which I think it obviously is for Apple, then it's probably a fine long-term investment. Now, it's not a perfect thing. There's a lot of other research and due diligence you got to do, but Apple's probably going to be fine long-term. And so, again, regardless of what the market does, I think Apple's going to be fine long-term. But there is an argument for a short-term pullback, I think. I think the market, I think corrections are healthy, and I think Apple and a lot of other tech stocks are up a lot short-term. And so, again, I'm not saying it's going to drop. I'm not saying it's going to go up. I really don't know. But long-term, when you zoom out more, Apple's going to be fine. When you zoom in a little bit, it becomes, I think, more vulnerable to pullbacks or corrections. But again, if you're holding long-term, it shouldn't mean much anyway. No one in this chat wants to wait 10 years to get rich. Well, buy a lottery ticket, brother. You know, the biggest edge the market ever gives you is buying and sitting. You know, despite what get rich quick, you know, teenagers tell you, you know, you want to get rich, buy a lottery ticket, bro. You know what I mean? Like, again, you research this, you're going to get a bunch of people that feed you a bunch of crap. They tell you they can make 50% in a month or whatever it is, 10% a day. Just nonsense, total nonsense. Again, the only people that are really falling for that are people that don't have that market experience and also want to get rich. You know, now you want to get rich, diversify and sit. That's how you get rich. You know, if you want to get good at day trading, that's an option as well. But again, trying to get rich quick is the single easiest way to lose money quick, you know? What do you think NVIDIA long term? I think NVIDIA's up a lot short term. It's definitely not free money. If it was a penny stock, you could call it free money, Zoldra. But I think for stuff like Apple, it costs money. It's not cheap to invest in Apple. It's a large cap company. It costs $190 a share. You know, you want to buy 4 shares of Apple, you're going to spend $1,000 on it. Or no, you're going to spend, you want to buy 5 shares of Apple, you're going to spend $1,000 on it, basically, a little bit less, you know. But again, you can spend $960 for 4 shares of Apple. It's certainly not free money. You know, it costs money to make money, and, you know, Apple's not cheap as a stock. I mean, free returns expected. Yeah, but I think at a certain point, like, okay, you got a lot of people that watch The Big Short, right? They watch The Big Short. They fantasize about like being as smart as Michael Burry and proving everybody wrong and all that stuff. And I think that's fine. But I think the big thing to understand is that over the last century, one of the most consistent edges is putting your money in broad market ETFs like the S&P 500, basically diversifying into the largest companies in the world and sitting has been the single easiest way to earn returns in the market. Now, you can buy that, you can buy gold, you can buy real estate. It's all the same thing, but it's not free money. Again, the whole point of the S&P 500 and Apple and Amazon stock is to hedge against inflation long term. If you don't hedge and you sit on cash, your cash is going to be worth noticeably less as time goes on. And so in that regard, you know, you got to hedge against that inflation. You got to buy equities, you got to buy stocks, you got to buy real estate, buy gold, however you want to do it. You can do it. It's definitely not free money. You got to sit on it. You know, you're exchanging money for time. And again, in order to really have a true edge, it's going to be years to earn safe returns with stuff like Apple and Amazon and Google and Walmart. You know what I mean? Like, it's going to take time. It's not free. You're exchanging it for time. You're tying your money up for 10 years to earn those returns. And so it's certainly not free. But I see what you're saying. It's all good, bro. It's all love, you know. But you're competing against 5% bonds. Well, yeah, well, the market's up 40% this year. The divvy's not free money as well. Somebody mentioned earlier IEP, Carl Icahn company. He said, oh, they pay $2 quarterly dividend. And I brought up the fact that they're down about $20 on the year per share. They're down like 60% on the year or whatever it is. And so nothing's free, you know, especially not a $2 quarterly dividend. You got to sit through a lot of nonsense in IEP to get that $2 quarterly dividend. Again, we got 13 minutes. I'll put the timer up. We got 13 minutes until Apple earnings drop. Apple earnings call drops, that is. Again, you can kind of see the countdown timer in the top right. I don't know about Disney and PayPal. I don't know. I'll probably buy. I'm holding both of those, but I don't know what they're going to do short term. I have no idea. You know. Again, Apple just cracked lows here. We'll put a level. And again, I guess my point is like, okay, the easiest way I can explain it, and I think a lot of people are gullible and they get kind of caught up in this, chasing, you know, whatever. But again, Big Short came out. Everybody wants to be short biased. Everybody's skeptical of markets. And I understand it. I'm skeptical too. I'm a very skeptical person. But a year ago in my live stream, all everybody was selling was, oh, the market's going to crash. The market's going to crash. The SPY was at 350. Everybody's yelling the market's going to crash. In the end, if you look at, and again, so what do retail traders do? You know, young retail traders do. What do? They take their money out of the market. Everybody's saying the market's going to crash. They don't want to get stuck in a crash, right? So they sell. Then over the last year, the market rips up 40%. More than that in a lot of areas. And who missed out on that move? A lot of retail traders did, because again, everybody was running around screaming the sky is falling. Who made money over the last year? The banks did. And so it's like, when you really look at who's making money, who's like, you got to question, again, I'm a skeptical person. Who's putting out the sentiment? Who put out the sentiment a year ago that the market was going to crash? The banks probably did, you know, and then who rode that market up? The banks did, you know. And so again, I'm skeptical, but nobody knows. Nobody knows. And again, long term, the market will probably go up, at least if you invest in blue chip healthy companies. You put your money in penny stock crap, they're probably going to fail. They're probably going to go down. But, you know, I think when you zoom out and look at the market objectively, again, when you look at the actual trend of the market, again, here's the SPY. Here's a long-term chart. Here's a one-day chart. Let's put a weekly chart up instead. And you can kind of see what it looks like to me more so is that we're kind of getting out of a mini crash that we were in the 21s and 22 year. So again, we had a little mini crash down here. Again, the SPY was at 350. Everybody was saying the sky is going to fall. Everybody's scared. And then what happens? The market pumps up huge percentages, and a lot of retail missed out on it because, again, everybody wants to be Michael Burry. But at this point in time, I agree with a lot of people in terms of like the market being extended on the upside. And again, you can be bearish. I guess the point is like, listen, you can be bearish short term, but trying to pick and isolate the correct timing to predict the stock market crash, as cool as Michael Burry looked in 2008 on the Big Short movie and in the market crash of 2008, as cool as that made him look, trying to bet on that edge of being able to accurately predict when the market's going to turn is a terrible edge. It's very risky. Michael Burry has picked 20 crashes. He said the sky was going to fall 20 times over the last 20 years. He's been right about one of them. One. You know, so even if he is correct, again, he's running at 5% accuracy, even if we do crash right now. So I guess the point is be skeptical of both sides. Don't just be skeptical of the long side. 9 minutes, guys. 9 minutes. We'll see if we get any upward movement. Apple just broke the lows. He only needed one. Absolutely, man. I like Michael Burry. He's a smart dude. Again, I'm not hating on him. But again, I guess my point is, you know, a very famous, you know, mind of intelligence once said, don't go chasing waterfalls. You know, stick to the rivers and the lakes that you're used to. You know. I don't know who said it. I'm just joking. I grew up in the 90s. I know who said it. But point is, don't go chasing short crashes and stock market crashes. They're going to be incredibly difficult to predict. Hey, we got 8 minutes, guys. 8 minutes. John, man. Again, Amazon at 138s right now. 138s. He's in real estate now? Yeah. I don't know. I think Amazon is up a lot. Apple's down a little bit. And so I think they kind of cancel each other out. I think Apple's more heavily weighted in like the S&P 500. But Amazon is up more than Apple is down, I think. Yeah. Amazon's up way more than Apple's down. So I think they're probably pretty even. Amazon's still pushing up to 138s. And again, maybe the earnings call turns this thing around. We got 6 minutes left. TLC, yeah. I like TLC, bro. I grew up on TLC. And that Beyonce album. R. Kelly, bro. R. Kelly's got some heat lately, okay? But if you're my age, you remember the R. Kelly album. I remember it. They had the I Wish song. I remember that song. Again, I don't know what listen. I don't know anything else about the man, but he can sing, you know. All right, 6 minutes, guys. 6 minutes. Sorry, I'm trying to get this shrimp right here. Disney, Etsy, PayPal. I mean, long term, I'm more confident in probably Disney than any of the other ones. Etsy is one that I'm kind of neutral on. I'm actually holding a little bit of shares in Etsy, I think, right? Let me see. Yeah, I bought like 15 shares of Etsy, but I'm kind of neutral on it. PayPal is one where I think it'll probably be okay, but I think there's also a small chance that crypto renders it useless and it has a huge downfall. But again, I think that's a small chance. I think it's probably not going to do it, but it's a big enough chance to where I'm not necessarily trying to invest in PayPal long term either, because I think crypto replaces it to a certain extent. But again, I think it's low probability but risky enough to where it scares me from investing, and it is heavy. Again, Apple back up to 188.50s. What are you eating? My wife made me ceviche, I think is how you say it. It's got avocado, mango. It's got like guacamole with shrimp, avocado, and mango. And a bunch of other stuff that you like dip in chips. It's kind of like a dip almost. It's good. All right. We have 4 minutes, guys. 4 minutes. Apple's still over 138s. Also, if you haven't already, give me a follow on Twitter at Beginner Trades. We cover all this stuff for free. Check it out. It's shrimp. You can see crypto replacing PayPal unless crypto offers a guarantee on purchases like PayPal. If you get screwed with PayPal, you can use their system for refunds, 100%. But I think there's also some cons of that. It's less anonymous. Less anonymous. I mean, anonymous. It's less anonymous with PayPal than it is crypto. I'm not saying crypto is completely anonymous, but like there's some pros and cons there for sure. Again, I think PayPal is probably going to be fine. And again, when PayPal dips, I typically buy it if it's cheap enough. I'll buy whatever blue chip there is as long as it's cheap enough. But I also think there's risks. And so, risks stop me from being super bullish when it long term, although I still think it'll probably go up. I don't think eBay uses PayPal anymore. I think they use their own processing service. I think they used to use PayPal, but I don't think they use them anymore. I might be wrong there, though. All right. Hey, 2.5 minutes, guys. 2.5 minutes. Get ready. Be ready. Again, we're going to stream the full earnings call live right here. We're waiting. Y'all can hear the music, correct? I just want to make sure y'all can hear it. True, but that's why a lot of people don't like crypto. Yeah, I mean, I feel you. I get it. PayPal PE is ridiculous, under 70. Yeah, the PE ratio is pretty cheap for PayPal. Bro, ceviche is raw fish. You're not eating ceviche. If a taco is typically made with beef and I decide to make it with chicken, does that mean it's not a taco anymore, bro? Of course not. Stop arguing over dumb stuff. Last I bought PayPal sometime 2 years ago. I bought PayPal on the last dip when it was dipping down to like 50s. And then it bounced back up to 75. And then I took profit and wherever. I don't remember where. Now it's back down to 60s. And so I bought a little bit more, but it's small. I'll probably add more if it keeps dipping, but I'm not going to plan to hold that long term. Where's Coinbase at? All right, music is still there. Oh, I got to switch my headphones. Y'all are supposed to remind me. It's all good. All right, less than a minute, guys. On the left, it is bouncing up a little bit. Apple is bouncing up a little, but it's still down relative to the actual report. All right, here we go. Sorry, I don't know if y'all can hear my headphones talk to me. We got 20 seconds, guys. Again, make sure you hit the live button next to the play button to make sure you're fully caught up on stream. Make sure you hit the live button next to the play button. I'm going to put Apple up on the big chart right here. Here's Apple on the left side. Again, make sure you hit the live button next to the play button to make sure you're fully caught up. Coinbase back to 92s. You should be able to hear the music now, correct? I'm going to exit out of it now and then get ready. All right. Terrible hold music for Apple. I give it about a 3 out of 10 on their hold music. Tupperware is flying. Yeah, Tupperware has been crazy. What is the promo code for Mumu? I don't think I have an actual promo code. I've got an affiliate link, but no promo code. Again, if you want to check out the affiliate link, here it is. My audio is not spotty. I was just turning off my headphones and then putting it back up. And so, again, we're waiting here. They haven't started it yet, but we're waiting. As soon as they start, we'll undo it and let you hear it. This song's ending. We'll see if they start. Again, waiting. Are they about to start? Nope. Yeah, I mean, it's fine to be bearish sometimes, but I guess like I look for diversity. Like some days I'm bullish, some days I'm bearish. If somebody's bearish every day, you just kind of label them a perma bear, and you know, same thing if they're bullish every day. I think the market sometimes looks extended on the upside and the downside. Again, Amazon at 138 right now, still trying. Again, there's no music playing. We're still waiting for this to start. I kind of like this latest song. The earnings call is supposed to be right now. I think they're late though. It's scheduled for 5 o'clock. It's scheduled for 5 p.m. Eastern Standard Time. That's right now. They're late. Let me reset this just to make sure. Quarters. Yeah, they just still haven't started. They're late. Again, we're waiting. All right, here we goes. Sound check. Sound check. Let me know if it sounds good. Well, they stopped, but they haven't said anything
Good
yet.
day and welcome to
Okay,
the
sound
Aapl
check.
Q3 fiscal year 2023 earnings conference call. Today's call is being recorded. At this time, for opening remarks and introductions, I would like to turn the call over to Sayori Casey, Vice President of Finance. Please go ahead.
Thank you. Good afternoon, and thank you for joining us. Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of macroeconomic conditions on the company's business and the results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements, which speak only as of the date they're made. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Sayori. Good afternoon, everyone, and thanks for joining us. Today, Apple is reporting revenue of $81.8 billion for the June quarter, better than our expectations. We continue to see strong results in emerging markets, driven by robust sales of iPhone, with June quarter total revenue records in India, Indonesia, Mexico, the Philippines, Poland, Saudi Arabia, Turkey, and the UAE. We set June quarter records in a number of other countries as well, including France, the Netherlands, and Austria. And we set an all-time revenue record in services driven by more than 1 billion paid subscriptions. We continue to face an uneven macroeconomic environment, including nearly 4 percentage points of foreign exchange headwinds. On a constant currency basis, we grew compared to the prior year's quarter in aggregate and in the majority of markets we track. We continue to manage deliberately and innovate relentlessly, and we are driven by the sense of possibility those efforts inspire. To that end, before I turn to the quarter in more detail, I want to take a moment to acknowledge the unprecedented innovations we were proud to announce at our Worldwide Developers Conference. In addition to extraordinary new Macs and incredible updates to our software platforms, we had the chance to introduce the world to spatial computing. We were so pleased to share the revolutionary Apple Vision Pro with the world, a bold new product unlike anything else created before. Apple Vision Pro is a marvel of engineering, built on decades of innovation only possible at Apple. It is the most advanced personal electronic device ever created, and we've been thrilled by the reaction from press, analysts, developers, and content creators who've had the chance to try it. We can't wait to get it into customers' hands early next year. Now let me share more with you on our June quarter results, beginning with iPhone. iPhone revenue came in at $39.7 billion for the quarter, down 2% from the year-ago quarter's record performance. On a constant currency basis, iPhone revenue grew, and we had a June quarter record for switchers, reflecting the popularity of the iPhone lineup. iPhone 14 customers continue to praise the exceptional battery life and essential health and safety features, while iPhone 14 Plus users are loving the new larger screen size. And with Dynamic Island always on display and the most powerful camera system ever in an iPhone, the iPhone 14 Pro lineup is our best ever. Turning to Mac, we recorded $6.8 billion in revenue, down 7% year over year. We are proud to have completed the transition of our entire Mac lineup to run exclusively on Apple Silicon. We are also excited to have introduced the new 15-inch MacBook Air during the quarter, the world's best 15-inch laptop and one of the best Macs we've ever made. And we launched two new powerhouses in computing, Mac Studio with M2 Max and M2 Ultra, and Mac Pro with M2 Ultra, which are the most powerful Macs we've ever made. iPad revenue was $5.8 billion for the June quarter, down 20% year over year, in part due to a difficult compare because of the timing of the iPad Air launch last year. Customers are loving iPad's versatility and exceptional value. There was a great deal of excitement from creatives when we brought Final Cut Pro and Logic Pro to iPad this spring. And with the back-to-school season in full swing, iPad has the power to help students tackle the toughest assignments. Across wearables, home, and accessories, revenue was $8.3 billion, up 2% year over year and in line with our expectations. Packed with features to empower users to live a healthier life, Apple Watch and Apple Watch Ultra continue to help people take the next step on their wellness journey. As I mentioned earlier, last quarter, we held our biggest and most exciting WWDC yet. We were thrilled to welcome developers from across the globe to Apple Park, both in person and virtually, and to share some stunning new announcements with the world. In addition to Apple Vision Pro and the new Macs that we introduced, we had the chance to reveal some truly remarkable new innovations to our software platforms. From exciting new features like live voicemail and standby in iOS 17 to new tools for users to work, play, and personalize their experience in macOS Sonoma and iPadOS 17, to a fresh design and new workout capabilities in watchOS 10, there's so much coming later this year to empower users to get more out of their devices, and we think they're going to instantly love these new features. It was also an exciting quarter for services, where revenue reached $21.2 billion and saw a sequential acceleration to an 8% year-over-year increase, better than we expected. We set an all-time revenue record for total services and in a number of categories, including video, Apple Care, cloud, and payment services. Since we introduced Apple Pay almost a decade ago, customers have been loving how easy it is to make purchases online, in apps, and in stores. We're also pleased to see Apple Card build on the success of Apple Pay. Designed with our users' financial health in mind, Apple Card has become one of the most successful credit card programs in the US, with award-winning customer satisfaction. And this spring, we introduced a new high-yield savings account for Apple Card customers, which has become incredibly popular, with customers already making more than $10 billion in deposits. Meanwhile, Apple TV Plus continues to provide a spectacular showcase of imaginative storytelling. Recently, fans welcomed new series like Hijack and Silo, as well as returning fan favorites like Foundation and The After Party. In the few years since its launch, Apple TV Plus has earned more than 1,500 nominations and 370 wins. That includes the 54 Emmy Award nominations across 13 titles that Apple TV Plus received last month. It's also been an exciting time for sports on Apple TV Plus. Soccer legend Lionel Messi made his debut with Major League Soccer last month, and fans all over the world tuned in with MLS Season Pass. We are excited about our MLS partnership, and we're thrilled to see Messi suiting up with Inter Miami. And just in time for summer concert season, Apple Music launched new discovery features celebrating live music, including venue guides in Apple Maps and set lists from tours of major artists. These new features and others join a lineup of updates coming later this year to make services more powerful, more useful, and more fun than ever. Everything we do is in service of our customers, and retail is where we bring the best of Apple. During the quarter, we opened the Apple Store online in Vietnam, and we're excited to connect with more customers there. We also redesigned our first ever Apple Store located in Tysons Corner, Northern Virginia, with inclusive, innovative, and sustainable design enhancements. We opened a beautiful new store beneath our new London headquarters in the historic Battersea Power Station. And the performance of the stores we opened in India this spring exceeded our initial expectations. With every product we create, every feature we develop, and every interaction we share with our customers, we lead with the values we stand for. We believe in creating technology that serves all of humanity, which is why accessibility has always been a core value that we embed in everything we do. On Global Accessibility Awareness Day, we unveiled some extraordinary new tools for cognitive, vision, hearing, and mobile accessibility that will be available later this year, including assistive access, which distills apps to their most essential features, and personal voice, which allows users to create a synthesized voice that sounds just like them. Building technology in service of our customers also means protecting their privacy, which we believe is a fundamental human right. That's why we were pleased to announce major updates to Safari private browsing, communication safety, and lockdown mode to further safeguard our users. And as part of our efforts to build a better world, we announced that we've more than doubled our initial commitment to our Racial Equity and Justice Initiative to more than $200 million. We will continue to do our part to support education, economic empowerment, and criminal justice reform work. And while supporting efforts to advance equity and opportunity, we continue to build a culture of belonging at Apple and a workforce that reflects the communities we serve. Through our environmental work, we're making strides in our commitment to leave the world better than we found it. Last month, Apple joined with global nonprofit Acumen in a new effort to improve livelihoods in India through clean energy innovation, and we are as committed as ever to our Apple 2030 goal to be carbon neutral across our entire supply chain and the life cycle of our products. We've long held that education is the great equalizer. With that in mind, we're expanding Apple Learning Coach, a free professional learning program that teaches educators how to get more out of Apple technology in the classroom. To date, we've welcomed more than 1,900 educators across the U.S. to the program. By the end of the year, we'll offer Apple Learning Coach in 12 more countries. As we're connecting with teachers, we're also celebrating the graduations of students at our app developer academies around the world. From Detroit to Naples to Riyadh and more, we're excited to watch these talented developers embark on careers in coding and find ways to make a positive difference in their communities. Apple remains a champion of innovation, a company fueled by boundless creativity, driven by a deep sense of mission, and guided by the unshakable belief that a great idea can change the world. Looking ahead, we'll continue to manage for the long term, always pushing the limits of what's possible and always putting the customer at the center of everything we do. With that, I'll turn it over to Luca.
Thank you, Tim, and good afternoon, everyone. Revenue for the June quarter was $81.8 billion, down 1% from last year and better than our expectations, despite nearly 4 percentage points of negative impact from foreign exchange. On a constant currency basis, our revenue grew year over year in total and in the majority of the markets we track. We set June quarter records in both Europe and Greater China and continue to see strong performance across our emerging markets, driven by iPhone. Products revenue was $60.6 billion, down 4% from last year, as we faced FX headwinds and an uneven macroeconomic environment. However, our installed base reached an all-time high across all geographic segments, driven by a June quarter record for iPhone switchers and high new-to rates in Mac, iPad, and Watch, coupled with very high levels of customer satisfaction and loyalty. Our services revenue set an all-time record of $21.2 billion, up 8% year over year, and grew double digits in constant currency. Our performance was strong around the world as we reached all-time services revenue records in Americas and Europe, and June quarter records in Greater China and rest of Asia Pacific. Company gross margin was 44.5%, a record level for the June quarter, and up 20 basis points sequentially, driven by cost savings and favorable mix shift towards services, partially offset by a seasonal loss of leverage. Products gross margin was 35.4%, down 130 basis points from last quarter due to seasonal loss of leverage and mix, partially offset by favorable costs. Services gross margin was 70.5%, decreasing 50 basis points sequentially. Operating expenses of $13.4 billion were below the low end of the guidance range we provided at the beginning of the quarter and decelerated from the March quarter. We continue to take a deliberate approach in managing our spend with strong focus on innovation and new product development. The results of these actions delivered net income of $19.9 billion, diluted earnings per share of $1.26, up 5% versus last year, and very strong operating cash flow of $26.4 billion. Let me now provide more detail for each of our revenue categories. iPhone revenue was $39.7 billion, down 2% year over year, but grew on a constant currency basis. We set revenue records in several markets around the world, including an all-time record in India and June quarter records in Latin America, the Middle East and Africa, Indonesia, the Philippines, Italy, the Netherlands, and the UK. Our iPhone active installed base grew to a new all-time high, thanks to a June quarter record in switches. This is a testament to our extremely high levels of customer satisfaction, which 451 Research recently measured at 98% for the iPhone 14 family in the US. Mac generated $6.8 billion in revenue, down 7% year over year. We continue to invest in our Mac portfolio, and this past quarter, we were pleased to complete the transition to Aapl Silicon for the entire lineup. This transition has driven both strong upgrade activity and a high number of new customers. In fact, almost half of Mac buyers during the quarter were new to the product. We also saw reported customer satisfaction of 96% for Mac in the US. iPad revenue was $5.8 billion, down 20% year over year, and in line with our expectations. These results were driven by a difficult compare against the full quarter impact of the iPad Air launch in the prior year. At the same time, we continue to attract a large number of new customers to the iPad install base, with over half of the customers who purchased iPads during the quarter being new to the product. And the latest reports from 451 Research indicate customer satisfaction of 96% in the US. Wearables, home, and accessories revenue was $8.3 billion, up 2% year over year, with a June quarter record in Greater China and strong performance in several emerging markets. We continue to see Apple Watch expand its reach, with about two-thirds of customers purchasing an Apple Watch during the quarter being new to the product. And this is combined with very high levels of customer satisfaction, which was recently reported at 98% in the United States. Moving on to services, we reached a new all-time revenue record of $21.2 billion, with year-over-year growth accelerating sequentially to 8% and up double digits in constant currency. In addition to the all-time records Tim mentioned earlier, we also set June quarter records for advertising, App Store, and music. We are very pleased with our performance in services, which is a direct reflection of our ecosystem strength. First, our installed base of over 2 billion active devices continues to grow at a nice pace and establishes a solid foundation for the future expansion of our ecosystem. Second, we see increased customer engagement with our services. Both our transacting accounts and paid accounts grew double digits year over year, each reaching a new all-time high. Third, our paid subscriptions showed strong growth. This past quarter, we reached an important milestone and passed 1 billion paid subscriptions across the services on our platform, up 150 million during the last 12 months, and nearly double the number of paid subscriptions we had only 3 years ago. And finally, we continue to improve the breadth and the quality of our current services, from 20 new games on Apple Arcade to brand new content on Apple TV+, to the launch of our high-yield savings account with Apple Card. Our customers are loving these enhanced offerings. Turning to the enterprise market, our customers are leveraging Apple products every day to help improve productivity and attract talent. Blackstone, a global investment management firm, is expanding its Apple footprint from their corporate iPhone fleet to now offering the MacBook Air powered by M2 to all of their corporate employees and portfolio companies. Gilead, a leading biopharmaceutical company, has deployed thousands of iPads globally to their sales team. Over the last 6 months, they have also doubled their Mac user base by making MacBook Air available to more employees with a focus on user experience and strong security. Let me now turn to our cash position and capital return program. We ended the quarter with over $166 billion in cash and marketable securities. We repaid $7.5 billion in maturing debt while issuing $5.2 billion of new debt and increasing commercial paper by $2 billion, leaving us with total debt of $109 billion. As a result, net cash was $57 billion at the end of the quarter. During the quarter, we returned over $24 billion to shareholders, including $3.8 billion in dividends and equivalents, and $18 billion through open market repurchases of 103 million Apple shares. We continue to believe there is great value in our stock and maintain our target of reaching a net cash neutral position over time. As we move ahead into the September quarter, I'd like to review our outlook, which includes the types of forward-looking information that Saori referred to at the beginning of the call. We expect our September quarter year-over-year revenue performance to be similar to the June quarter, assuming that the macroeconomic outlook doesn't worsen from what we are projecting today for the current quarter. Foreign exchange will continue to be a headwind, and we expect a negative year-over-year revenue impact of over 2 percentage points. We expect iPhone and services year-over-year performance to accelerate from the June quarter. Also, we expect the revenue for both Mac and iPad to decline by double digits year-over-year due to difficult compares, particularly on the Mac. For both products, we experienced supply disruptions from factory shutdowns in the June quarter a year ago, and we're able to fulfill significant pent-up demand in the year-ago September quarter. We expect gross margin to be between 44% and 45%. We expect OpEx to be between $13.5 and $13.7 billion. We expect OI&E to be around negative $250 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16%. Finally, today our board of directors has declared a cash dividend of 24 cents per share of common stock, payable on August 17, 2023, to shareholders of record as of August 14, 2023. With that, let's open the call to questions.
Thank you, Luca. We ask you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We will go ahead and take our first question from Shannon Cross with Credit Suisse. Please go ahead.
Thank you very much, and nice to speak with you. Tim, you mentioned, and actually Luca too, you mentioned an uneven macro environment during the quarter several times on the call. I'm wondering if you can talk on a geographic basis about some of the trends you're seeing in iPhone. I'm specifically wondering, how demand is trending within regions.
Shannon, I'll answer it. I didn't get the end of your question.
I think she has dropped.
Okay. Well, let me answer the question for the part that I could follow. So on a geographic basis, we've had great performance for iPhone in emerging markets. We set June quarter records in many of the emerging markets. We grew in total double digits, and the performance was strong across the board in emerging markets, from China, where our performance improved from -3% to +8% in the June quarter, and we grew double digits in constant currency, to many other areas around the world, from India, where again we set a June quarter record with very strong performance there, Indonesia, Southeast Asia in general, Latin America, Middle East, and so it's been really good there. We also, as you can see from our geographic segments, we had a slight acceleration of performance in the Americas, primarily in the United States, but we declined there because the smartphone market has been, in a decline for the last couple of quarters in the United States.
Thank you very much. Sorry about that. I'm not sure why I cut off. In terms of gross margin, you were at the high end of the range, and you guided to 45% at the high end, which is, I think higher than I remember in 20 years of covering you. So
yeah.
How should we think about puts and takes of gross margin, and what it seems like there's like a perfect storm of good things. So maybe if you can talk about how you're thinking about it more holistically. Thank you.
Yeah, I think you remember correctly, Shannon, because the 44.5% for the June quarter is an all-time record for us in June. We were up 20 basis points sequentially. It was driven by cost savings and a mix shift towards services, which obviously helps company gross margins, partially offset by the seasonal loss of leverage. We have a commodity environment that is favorable to us. Our product mix is quite strong at this point. And so with the exception of foreign exchange, we continues to be a drag, and it was a significant drag on a year-over-year basis. Yeah, we are in a good position right now. We are in a good position for the June quarter. And as I mentioned, we expect similar level of gross margins for the same reasons, frankly, for the September quarter.
Thank you very much.
Next question, please.
Our next question comes from Wamsi Mohan of Bank of America. Please go ahead.
Yes, thank you so much. Luca, can you just give us a little more color around the guidance? Your overall revenue performance, you called out similar. Obviously, you absorbed a higher FX impact this quarter versus your guide, and you also noted services acceleration. So just wondering, when you think about that comment on iPhone acceleration, is that on a reported basis? Is that constant currency basis? And is there something that's changing in terms of seasonality, perhaps for you, that is causing not as much step up in product revenue as typical on a sequential basis? And I will follow up.
Yes. So all our comments are in reported currency, not in constant currency, in relation to the outlook. And we said acceleration sequentially for iPhone and for services. But we also pointing out, and this is where I think, Wamsim, you're referring to some seasonality issues. We also said that for Mac and iPad, we expect to decline double digits. And the reason for that is that we have a very difficult compare versus last year. You remember that a year ago in the June quarter, we had factory shutdowns for both Mac and iPad. And so we were able to fill the pent-up demand from those shutdowns during the September quarter. So an unusual level of activity that we had a year ago. And so now obviously the compare is difficult. So we expect both iPad and Mac to be down double digits, which offset the acceleration that I mentioned for iPhone and services.
Okay, thank you, Luca. And Tim, I was wondering if you could update us on what % of iPhones are sold on some type of installment basis now versus full upfront payment on a global basis, and maybe some thoughts on if you expect similar promotional activity from carriers, especially in the US, that seem to be grappling with a lot of cash flow issues this particular year. Thank you so much.
Wamsi, I'll take it. We've done a really good job over the last few years with affordability programs around the world, directly in our direct channel and with our partners around the world. The majority of iPhones at this point are sold using some kind of a program, trade-ins, installments, some kind of financing. And that percentage, which again, it's well over 50%, is very similar across developed and emerging markets. We want to do more of that because we think it really helps reduce the affordability threshold for our products. And we think it is also one of the reasons why our product mix has been very strong during the last couple of cycles. So we will continue to push on that front.
Okay, thank you, Luca.
Thank you, Wamsi. Next question, please.
Our next question is from David Vogt with UBS. Please go ahead.
Great. Thanks, guys, for taking my questions. I just wanted to follow up on 2 points that both you, Tim and Luca made about growth and maybe commodities. So just to be clear, I know you're talking about an acceleration in iPhone, but the comp is about 2 point easier from FX. So just want to understand, is that on a like-for-like basis, excluding the currency improvement of about 2 points from the June quarter to the September quarter? And from a commodity perspective, I know last quarter you talked about buying a lot of inventory at favorable prices, which was an incredibly smart strategy. Where do you sit today, and what's sort of the timing or the duration of that commodity sort of backlog that you have as we think about next quarter and the subsequent quarters? How far does that get you out into the future from this favorable cost dynamic? Thanks.
Let me start again. I just want to be clear about the guidance, the outlook guidance that we provided. We're referring entirely to reported numbers. So they take into account the fact that we have a slight improvement in foreign exchange. So when I talk about similar performance, I refer to reported performance in the June quarter and then the reported performance in the September quarter. And again, we expect on a reported basis, our iPhone performance to accelerate, our services performance to accelerate, and iPad and Mac to decline double digits. On the commodity front, as I mentioned, the environment is favorable. We always make sure that we take advantage of the opportunities that are available in the market, and we will continue to do that going forward.
Look, any sense on how long that gives you a runway today based on what you currently have? Give us a sense for at least the short-term tail end.
I don't want to speculate past the September quarter because that's the horizon where we provide guidance. And I've said, that the guidance for September is 44 to 45, which is historically very high, and so obviously that reflects a favorable environment for us.
Thank you, David.
Great. Thanks a lot, guys.
Can we have the next question, please?
Our next question is from Eric Woodring with Morgan Stanley. Please go ahead.
Hey guys, thank you for taking my question. I have two as well. Maybe if we just start kind of big picture, Tim or Luke, I was wondering if you could just kind of share some incremental color on how you think the consumer is behaving today versus 90 days ago, and maybe how that differs by region. Meaning, are there any signs that consumer is incrementally more willing to spend on things like consumer electronics, or is there still relative caution in the market? Are there any regions where you're seeing more strength in the consumer, and how sustainable do you think some of that strength or weakness could be based on some of the KPIs you track? And then I have a follow-up. Thanks.
Yeah, hi David, it's Tim. If you sort of step around the world, we did exceptionally well in emerging markets last quarter, and even better on a constant currency basis. And so emerging markets was a strength. If you look at China, in China we went from a -3 in Q2 to a +8 in Q3, and so in China we had an acceleration. If you look at the U.S., which is obviously in the Americas segment and is the vast majority of what's in there, there was also a slight acceleration sequentially, although the Americas is still declining somewhat year over year, as you can see on the data sheet. The primary reason for that is that it's a challenging smartphone market in the U.S. currently. And then in Europe saw a record quarter for the June quarter, a record. And so some really good signs in most places in the world.
Awesome. Thank you for that color,
Yeah.
Tim. And then, maybe Luca, a question for you. I think it's been about 3 quarters now where we've seen OpEx either grow below historical seasonality or come in below your expectations. I think this was the first time we've seen R&D grow less than 10% year over year since fiscal 2Q 2007. So can you maybe just talk about some of the cost actions you're taking, and as you look forward, what are the indicators that you're really evaluating that would give you greater confidence in perhaps returning back to a more seasonal cadence of OpEx spending, or is this just a new normal that we should be expecting? That's it for me. Thanks so much.
Well, obviously, we look at the environment, and we know that this has been an uncertain period for the last few quarters, and so we decided to be deliberate in what we do in terms of controlling our spend. And there's many areas across the company that we're working on, and we've been quite effective at slowing down the spend. We slowed down also the hiring within the company in several areas, and we're very pleased with our ability to decelerate some of the expense growth, taking into account the overall macro situation. We will continue to manage deliberately. You can see that we continue to grow our R&D costs faster than the rest of the company, as G&A is actually growing at a much slower pace, because obviously our focus continues to be in innovation and product development, and we will continue to do that.
Thank you, Eric. May we have the next question, please?
Our next question is from Michael Ng with Goldman Sachs. Please go ahead.
Hey, good afternoon. I just have 2 questions as well. First, it was encouraging to see the services outperformance in the quarter, up double digits on an FX neutral basis, and more services acceleration next quarter on a reported basis. I was just wondering if you could just talk a little bit more about key underlying drivers for the confidence in the services acceleration next quarter. Understand that FX eases a little bit, but anything to call out as it relates to things in Apple Search Ads that's helping. You're obviously making a lot of investments in Apple TV Plus between MLS and the Canal Plus deal. So any thoughts there would be great. Thank you.
Yeah, Yes, Michael, you're correct. I mean, clearly we've seen an improvement in the June quarter, and we expect further improvement in the September quarter. In June, the performance was across the board. Tim and I mentioned we set records really across the board. You know, we had all-time records in cloud, in video, in Apple Care, in payments, and June quarter records in App Store, advertising, and music. So we saw improvement in all our services categories. We think the situation will continue to improve as we go through September, and that's very positive because not only good for the financial results, but obviously it shows a high level of engagement of our customers in the ecosystem, which is very important for us. And it's really the sum of all the things that I mentioned in my prepared remarks. It goes from the fact that our install base continues to grow, so we've got a larger pool of customers, to the fact that our customers are more engaged as we have more transacting accounts and paid accounts on the ecosystem. And you know, the subscriptions business is very healthy with, you know, growth of 150 million paid subscriptions just in the last 12 months. It's almost double to what we had 3 years ago. And of course, we are providing more and more content to our users. And so the combination of all these things gives us good confidence for September.
Great. Thank you very much. And just as a related follow-up, it's about the hardware install base and services ARPU. You know, I thought I was curious when you talked about the services strength. You talked about the 2 billion plus install base. When you think about the opportunity to increase the services ARPU, do you really think about it internally on a per active iPhone user basis or on a per device basis? You know, said differently, I'm just curious where you think about whether you think there's an incremental opportunity for, you know, those users that have multiple devices. Do you really see a big services ARPU uplift in that respect? Thank you.
Well, we know that customers that own more than one device are typically more engaged in our ecosystem, and so obviously they tend to also spend more on the services front. I would say the biggest opportunity is that we know that there's a lot of customers that we have that are very familiar with our ecosystem. They're engaged in the ecosystem, but still today they're using only the portion of the ecosystem that is free. And so we think that by offering better content and more content over time, we're going to be able to attract more of them as paid customers.
Great. Thank you, Luca.
Thank you, Michael. May I have the next question, please?
Our next question is from Amit Daryanani with Evercore. Please go ahead.
Yep. Thanks for your time. I have two as well. You know, I guess, Luca, maybe we can talk on wearables a bit. The growth over there, I think, in constant currency was fairly impressive at plus 6%. We just touch on maybe what's driving that, and then how do we think about the wearables segment heading into the September quarter? I know you talked about a bunch of other ones, but how do we think about wearables into September as well?
Sorry, I mean, I didn't get the. What are you referring to?
Yeah, sorry. I was hoping you could talk a bit about the wearables segment, because the growth over there
Wearables
was fairly impressive.
Yeah.
And then how do you think about it into September as well?
Yeah. On the wearables front, we had a really good performance in Greater China. And that's, again, very important for us. It was a June quarter record for Greater China. Very important for us because, again, it shows that the engagement with the ecosystem in a market that is so important for us like China continues to grow. It means that there's more and more customers that are owning more than the iPhone. Also, we continue to grow the install base of the category very quickly because, as I mentioned, 2/3 of every buyer of Apple Watch during the course of the June quarter was new to the product. And so that is all additive to the install base. So, you know, it's just, you know, just great to see the AirPods continue to be a great success in the marketplace for us. And so things are moving in the right direction there. It's become a very large business for us. We in wearables, home and accessories, the last 12 months, we've done $40 billion of business, which is nearly the size of a Fortune 100 company. So it's become very important, and it's allowed us to diversify both our revenues and our earnings.
That's really helpful. And then, if I could just follow up, the Europe growth, the growth in Europe at up 5% is fairly notable as well. I think you have a few emerging markets that you put in Europe as well, but would love to understand what's happening in Europe, and if there's a way to think about sort of Western Europe or developed world versus emerging markets over there. Thank you.
Yeah, it's been very good, primarily on the emerging market side of Europe. We include India and the Middle East and Central and Eastern Europe into the Europe segment. But as we mentioned at the beginning of the call, we had a number of markets that did very well, like France, like Italy, the Netherlands, Austria. So it was a good quarter for Europe.
Thank you, Amit. Can we have the next question, please?
Our next question is from Harsh Kumar with Piper Sandler. Please go ahead.
Yeah, hey guys, thanks for letting me ask a question. I had one for Luca and then later on one for Tim. So Luca, for some time now, for many quarters, you've had a currency headwind, a foreign exchange currency headwind. It's conceivable that as rates start to come down, hopefully next year, that the dollar weakens. Could you take us to the mechanism of how that will work on your revenues and for your costs?
So we try to hedge our foreign exchange exposures because we think it's the right approach for the company in terms of minimizing the volatility that necessarily happens from the movements of currencies. We cannot effectively hedge every single exposure around the world because in some cases it is not possible. In other cases, it is prohibitively expensive. But we tend to cover all the major currency pairs that we have. About 60% of our business is outside the United States, so it's a very, very large and I would say very effective hedging program. And so we set up these hedges, and they tend to roll over very regularly, and then we replace them with new hedges at the new spot rate. So the impact that we're going to have on revenue and cost will depend on where the spot rates are at different points in time, and therefore, because of the way the program works, tends to be a bit of a lag in both directions as the foreign exchange moves over time.
Understood. Very helpful. And for Tim, historically, for the last many years, carriers in at least the U.S., which I think is your largest market for iPhone, have had programs to help folks upgrade, whether they give a cash rebate or you bring in your old phone, something like that. I was curious, as you get into your peak December quarter, if you're aware if these programs are in place. And the reason why I'm asking is I think earlier you mentioned that more than 50% of your phones are sold through some kind of program. I assume the number is even higher in the U.S.
I don't want to get into revealing specifics in the different carriers, but generally speaking, I would think that it would be quite easy to find a promotion on a phone, provided you're hooking up to a service and either switching services, carriers, or upgrading your phone at the same carrier. I think both of those cases today that you can find promotions out there, and I would expect that you'd be able to do that in the December timeframe as well.
Very well. Thank you.
Thank you, Harsh. Can we have the next question, please?
Our next question is from Aaron Rakers with Wells Fargo. Please go ahead.
Yeah, thank you for letting me ask a question. I have two as well. So first of all, I just want to kind of ask Tim strategically as we think about the services growth and kind of the content expansion behind that. I'm curious if you could help us maybe appreciate what you've seen from a sporting perspective in terms of the engagement with MLS, the engagement with Major League Baseball, and how strategically you're thinking about expansion in sports as a key driver of services growth going forward.
You know, we're focused on original content, as you know, with TV Plus, and so we're all about giving great storytellers the venue to tell great stories and hopefully get us all to think a little deeper. And sport is a part of that because sport is the ultimate original story. And for MLS, we could not be happier with how the partnership is going. It's clearly in the early days, but we're beating our expectation in terms of subscribers, and the fact that Messi went to Inter Miami helped us out there a bit, and so we're very excited about it.
Yep. Thank you. And as a quick follow-up, I'm just curious an update on, you mentioned in your prepared remarks the continued growth that you've seen in India. I'm curious of, how we think about that market opportunity looking forward. Is there anything that you see evolving that could accelerate, the opportunity for iPhone in that large mobile market?
We did hit a June quarter revenue record in India, and we grew strong double digits. We also opened our first 2 retail stores during the quarter, and of course it's early going currently, but they're currently beating our expectation in terms of how they're doing. We continue to work on building out the channel and putting more investment in our direct to consumer offers as well. And so I think if you look at it, it's the second largest smartphone market in the world, and we ought to be doing really well there. And where I'm really pleased with our growth there, we still have a very, very modest and low share in the smartphone market, and so I think that it's a huge opportunity for us, and we're putting all of our energies in making that occur.
Thank you, Aaron. Can we have the next question, please?
Our next question comes from Sidney Ho with Deutsche Bank. Please go ahead.
Thank you for taking my question. I just wanted to ask about the AI side of things. Your strategy on AI seems quite different than many of your peers. At least you don't talk too much about that, how much you invest in it. Maybe you can elaborate a little bit on that. But related to that, how do you see your investment in this area turning into financial performance in the future? Is it mainly through faster upgrade cycle, maybe higher ASP, or are you thinking about maybe additional services that you can capitalize on that? And then I'll follow up.
If you take a step back, we view AI and machine learning as core fundamental technologies that are integral to virtually every product that we build. And so if you think about WWDC in June, we announced some features that will be coming in iOS 17 this fall, like personal voice and live voicemail. Previously, we had announced life-saving features like fall detection and crash detection and ECG. None of these features that I just mentioned and many, many more would be possible without AI and machine learning. And so it's absolutely critical to us. And of course, we've been doing research across a wide range of AI technologies, including generative AI, for years. We're going to continue investing and innovating and responsibly advancing our products with these technologies with the goal of enriching people's lives. And so that's what it's all about for us. And as you know, we tend to announce things as they come to market, and that's our MO, and I'd like to stick to that.
Okay, that's fair. Thank you.
Yeah.
Maybe I have a follow-up is related to, you talked about WWDC, where you actually introduced Vision Pro there. Clearly a very big announcement there. How should we think about the revenue ramp related to Vision Pro? Is there any catalyst that we should be thinking about that will drive an inflection of that product? Thank you.
Yeah, there's enormous excitement around the Vision Pro. We're excited internally. Everybody that's been through the demos are blown away, whether you're talking about press or analysts or developers. We are now shipping units to the developer community for them to begin working on their apps. And we're looking forward to shipping early next year. And so we could not be more excited with it. I'm using the product daily, and so we're not going to forecast revenues and so forth on the call today, but we're very excited about it.
Thank you, Sydney. Can we have the next question, please?
Certainly, we will take our last question from Krish Sankar with TD Cowen. Please go ahead.
Yeah, hi, thanks for taking my question. I have two of them as well. Number one on iPhone, Tim, you mentioned about the record number of switchers in the quarter. I'm kind of curious how to think about, given the weak macro and slower consumer spending, how's the replacement cycle for iPhone? Is it similar, longer, shorter versus prior years? And can you talk a little bit about the demand linearity of iPhone during the June quarter? And then I had a follow-up.
Switchers were a very key part of our iPhone results for the quarter. We did set a record. We set a record in Greater China in particular, and it was at the heart of our results there. And we continue to try to convince more and more people to switch because of the experience and the ecosystem and that we can offer them. And so I think switching is a huge opportunity for us. In terms of the upgrade cycle and so forth, it's very difficult to estimate real time what is going on with the upgrade cycle. I would say if you think about the iPhone results year over year, you have to think about the SE announcement in the year-ago quarter, the iPhone SE announcement in the year-ago quarter, and so that provides a bit of a headwind on the comp. But as Lucas said, as he talked about how we're viewing Q4, the September quarter, we see iPhone accelerating in Q4.
Got it. Very helpful, Tim. And then my final question is, on your retail stores, you obviously have a very large retail footprint, and many of your stores seem to have been open for over a year now. How's the foot traffic there, and how to think about sales or the retail trends in the June quarter and implications for the back half of this year on a seasonality basis?
I'm sorry, are you talking about our retail stores?
Yes.
Yeah. If you look at retail, it's a key part of our go-to-market approach, and it will be so key and such a competitive advantage with Vision Pro. It will give us the opportunity to launch a new product and demo to many people in the stores, and so it has many advantages in it. And we continue to roll out more stores. As you know, we just opened 2 in India last quarter. There's still a lot of countries out there that don't have Apple stores that we would like to go into. And so we continue to see it as a key part of how we go to market and love the experience that we can provide customers there.
Awesome. Thanks a lot, Tim. Very helpful.
Yeah, thank you.
Thank you, Krish. A replay of today's call will be available for 2 weeks on Apple Podcasts at a webcast of Apple.
Okay, guys, so I guess that is it for now. Again, let me know what you guys think about this call. Apple pretty much flat from the actual earnings call itself. A lot of emotion showing up in the chat. Typical, to be honest. Like again, people acting like Apple's just on the road to failure are just. Again, I'm gonna act like this. I'm gonna be honest. Are just gamblers. Like y'all are taking big positions and gambling on earnings plays. And Apple's yearly chart looks like this. You know what I mean? And so again, I think it's a little extended on the upside, but it's certainly not about to fail. That's a ridiculous sentiment. Again, don't be so emotional about your gambles, guys. Anyways, if you haven't already, again, check out Top Step. Top Step currently paused trials, but you can join their wait list. They're the cheapest way to actually day trade the markets. There's no PDT rule in futures, and Top Step is the most legit funded program in the world. They pay out millions, fund thousands a year. Again, they give you a demo. They test your skill in futures. And in futures, you can day trade the S&P, the NASDAQ, currencies, gold, silver. The patterns are very similar to something like Apple. But again, there's no PDT rule. And they can actually fund you if you pass their challenge. And so again, if you want to check it out, here is the link. Great way to help support me. Check out my other sponsor as well. My other sponsor is Mumu, which is the platform you see. It's a zero commission broker that is just really, really useful. Like, look, I can pull up Coinbase here and show you all this different stuff. We're also going to be doing a crypto show today. I can pull up research, news on Coinbase, capital trends, overall trend, inflow, outflow, related stocks, all that good stuff. I can also look up economic data on Mumu, which is incredibly useful. If I pull up like their paperfolio section, I can follow other traders, see what they're buying, see what their portfolio looks like, see how much they're up, and then mimic their trades. Some of the best news in the game. You can see the headline news here. Again, I can go to a heat map and see the best performing sectors. And the best part is that it's zero commission. If you open up an account, you get and deposit at least $100, you get 5 free stocks. You open up an account and deposit over 1,000, you get 15 free stocks. You open up and deposit over 5K, they give you the previous 15 plus a free share of Google or Tesla. And I did get Tesla. Again, don't go anywhere, guys. We're about to close this stream down and start our crypto show. Again, on our crypto show, we're going to be talking about the downgrade, SEC versus crypto, and all the other stuff going live right now, guys. So again, stick around. We are going to be talking about cryptocurrencies and our crypto show. And again, if for whatever, as soon as we close this stream, it should immediately bring you there. But if for whatever reason it doesn't, if for whatever reason it does not bring you there, I'll post this link here so you can check out what it is. But again, here's the link for that. We'll post this link, and again, as soon as we end this show, it's going to bring you to this live stream. So again, I'll see you guys over there. Y'all be safe. Y'all be good. And yeah, I'll see you guys over there. Make sure this is good. I think we should be good. Let me get in this. Yeah, Amazon flying up. Amazon at huge levels. Again, Amazon currently sitting at like crazy high levels.